Hey guys, my name is Marina and I'll be your host for today. Welcome to Serendipity online webinar. Today we will be taking you into the world of trading, learning from one of the best African traders, Elvis Justice. So our program today promises to be exciting and full of impacting knowledge that can definitely change your life. Don't blink an eye and stay tuned. We are ready to start right now. So today's speakers would be Louis Boar, Yao Swinger, Kira Forex, COED, and Elvis Justice, of course. So before we get into our program, we have Louis Boar to give us an enlightenment of how he got to know about trading and share with us his experience with trading. So, Louis, we are waiting for you. So while we're still waiting for Louis, we're gonna introduce our speakers to our audience. So let's meet Mr. Kemar, maybe. Okay. Okay. Maybe Luther King, you're with us?
Hi.
Okay,
Yeah, I'm here.
Okay, hello, nice to meet you.
Nice to meet you too.
Okay, we will welcome COD now.
Hello.
Hello. So cool.
Can you see my background?
Yes, super. Next, please. Yao Swinger. We can hear you, Yao. Please turn on your microphone.
Hey, hello everyone. Hello everyone.
Hello. Okay. Kemar, you're with us or not? Turn on your microphone, please. We can hear you. Again. No.
Hello, can you hear me now?
Okay. We're waiting for Kira. We're waiting for Kira Forex. Kira, are you with us? We reintroduce Kema, please. Let's do it again. We want to hear you.
Can you hear me now?
Yeah, of course.
Awesome.
So, are you ready, guys? We are excited.
You introduced me.
Okay, good. Elvis Justice, legendary himself. So, okay, maybe we're ready to start now. Yes. Okay. Haven't Louis? No? Okay. Maybe. Okay. Join on our webinar, we have Mr. Kemmer to give some tips and advice to those who are not well acquainted with the world of trading and would like to be a part of it. So welcome, please, Mr. Kemmer.
Okay. So, hello guys. My name is Kema Trade. I'm going to take you through the beginner session. I would like to switch. You can see another Kema Trade. You can see another Kema Trade on there. I like to switch so that I can share the screen so that everyone can have, a look at the beginner slide that I'm going to use to. Hello, can everyone see my screen? I just shared the screen. Okay, wonderful. So let's go all the way back to the beginning. Okay. So welcome to the Forex world. Basically, when we talk about Forex, we are talking about what we call foreign exchange market, right? And so I'm here to give you the beginners, to give you the understanding of how the Forex market actually works, right? Make you understand the tidbits and then some of the few things that you might hear Forex traders speak out there, but not necessarily understand, right? I'll give you the definitions to these simple terms so that you actually come to know that it's not anything difficult. Now, when we come to the Forex market, the Forex market is basically an abbreviation, right? When we say Forex, it's an abbreviation for foreign exchange, So you can hear FX market, foreign exchange market, they are all Forex, right? It is the world's biggest financial trading market that we have out there. It means that we have other financial trading markets out there. We have the equity market, stocks market, it's a huge marketplace, right? Now, Forex is the biggest and most advantageous of all of these. Why? Let's get into it. So comparing all the other markets, right, the next biggest market that we have is the stock market. And the closest that we can have is the New York Stock Exchange, as you can see on my screen, trading 22.4 billion, on a daily volume, right? But Forex now trades $6.6 trillion on a daily basis, right? So there's no match to Forex. The one that comes closest is the New York Stock Exchange, and it's no match, even not up to $1 trillion on the Forex market. So when we say Forex is advantageous and more profitable than any other financial market we have out there, all we are saying is that the volume on there, right, and traded in a daily base can actually, make an individual, quite richer than trading in any other financial market that we have out there. Now, the basis of the Forex market explained, the foreign exchange market is open 24 hours a day, 5 days in a week, Mondays to Fridays. It means that Saturdays and Sundays, the market is closed, right? Now, let's cut to why some significant factors why we are saying that Forex is actually profitable and advantageous than other financial security markets that we have out there. I just talked about the liquidity, talked about the trading volume, right? The position taking. On the Forex market, you can take a position for a buy on the market. It's basically an area of transaction, and what we basically sell is currencies. And so on the Forex market, you can take a position for a buy when you actually think or you speculate that the asset that you are buying is going to increase in value. And then you can also sell when you speculate that the asset that you are holding would actually decrease in value, right? So it makes Forex really, really interesting. It is easier to monitor. What I mean is that anywhere you find yourself, you can monitor your Forex trades that you have entered, whether on your phone, on your laptop, you might be in school, you might be at work, anywhere you find yourself, even at home, you can monitor how your Forex investment is going relative to other financial security markets that we have out there that you cannot, concurrently have that luxury of monitoring, right? Then we have low transaction costs. Today, some of the people that offer us the chance to trade the Forex market, which we call brokers, actually give us the opportunity to be able to use as low as about $10 to invest in the Forex market. It means someone can literally put in $10 and then start growing their account from there. So it's really, really interesting, right? High leverage, I'll talk about leverage later on. Let's move on. On the Forex market, we trade currencies. And in the world, we know that there are major currencies that are concurrently talked about, major currencies that are concurrently transacted, right? And we have a few of these currencies here. Major 8 currencies on the Forex market are majorly sought for. We have the United States dollar, we have the Great British pound, the Eurozone, having all the countries that spend the euro, Canadian dollar, Japanese yen, Swiss franc, we have Australian dollar, and the New Zealand dollar, being our 8 major currencies when it comes to the Forex market. Now, there are other minor currencies, but they are not traded as much as these ones are paired on the Forex market. Why? It is basically because in the world today, when you go around asking for some currency, some people would not even know that there were currencies like this. Take for instance, Turkish lira. Very few people actually know Turkish lira. Singapore dollar. Did you know that Singapore also spends dollar? Chinese renminbi, we have the Russian ruble. Most people from my part of the world don't even know that Russians spend what we call ruble. But people know United States dollar. People know the Great British pound. It tells you about how much people are trading these currencies. When you go everywhere, you find the dollar. It is the world reserve currency. And also for the fact that the US economy is very, very stable. All right. Yes. And so that is why some of these currencies are tagged as the 8 major currencies that we trade on the Forex market. The liquidity on there, or how price increases and decreases on there based on the transactions that we do daily, is constant. And so it is easy to trade this and make money off these currencies. Now let's go on. All right. So I won't talk much about how the Forex market came about, but let me just brush. Previously, it was just the banks, big banks trading, within themselves. Then came the online market makers, giving us the opportunity, being retail traders, to connect the whole trading system through electronic process. So it means that on the Forex market, we don't have a station area where we could say that we are walking into to go make transactions. Everything is done electronically between a network of banks, right? And we are fortunate as retail traders to join in through what we call brokers on the Forex market. So before you trade the Forex market, you have to have a brokerage account. So there are a lot of brokers today, but we have few brokers that are actually good, which will be recommended by your mentors out there,
Sirodina. Yeah, okay, guys. We also have okay, guys. Kema have some troubles, so we are still waiting for him to reconnect. Okay, guys. Kema have some troubles, so we are still waiting for him to reconnect. Okay, so we're gonna ask another speaker. Please welcome Sirodzi. He will tell you about a real estate.
Hello, guys. Can you hear me?
Yeah.
Great. So, my name is Kwesi Otin Desmond. So C is Kwesi, O is Otin, and D is Desmond. I am somebody who is interested in developments, and every time I see developments, I get very excited. And so I decided to start a career in real estate. Now, before I get into an in-depth of real estate, I always want people to know what they are about and exactly what their motivation for whatever they are in is. And so I'll start from being an entrepreneur, which I am. So I just want to share something that is common to everybody, what we call the SMART goal. Now, you need to allow yourself to understand why you desperately want to be a successful trader, because at the end of the day, everybody wants to make money. Everybody wants to have a career. But how do you stand out? How do you become like the Elvis Justice, like the Al Swinger, like the Kira, like the Kima, like all the guys who currently have like academies where they are training people and everybody's happy to see them or hear them out every time? So we need to have SMART goals. Now, SMART as an acronym, I would say that the S for me stands for specific. So you need to be specific about what you want to achieve at the end of the day. Like all this Forex trading you're doing, all these investment opportunities that you're looking to go into, why am I even doing it? Like your goal needs to be clear and specific. That's the S on the SMART acronym. You need to ask yourself questions like, what do I want to accomplish? Why is this goal important? Why is it even important that off your busy schedule today, you are here on YouTube with us trying to study something new for yourself? Who is involved? Who do I want to meet? I'll get into the target market later. And where is what I want to be done located? Now, Elvis is in Russia, connecting all of us all around the world. And you need to also know who you want to get involved with, where you want to be located. You study about your environment. I'm in Ghana. There are probably some things that won't work out for me if I try it as a business. You need to know yourself and you need to know how to go into it. Now, when I go into real estate deep, you will then understand why you need to know where you are located and what kind of resources you need to achieve what you need to achieve. 2 on the SMART is the M. which is, to me, I say measurable. It's important that you have measurable goals. You don't go have dreams that run out of this world, dreams that will make you feel like, you can never achieve them. Dreams that are achievable to you. So that's being measurable. You ask yourself, how much money do I need to start Forex trading? How much money do I need to start real estate investment? How many people do I need to partner with? How many academies or trading or training centers do I need to be occupied in? You need to ask yourself questions like that. And the next is the A on the SMART goal, which is achievable. You need to know whether your goals are achievable. How realistic is this target? You're putting in $10 into an investment, and in 2-3 days, you want to make 3,000. Like, these things are very simple, but these things are things that shatter the dream of a lot of people, because they go into businesses and they want to be the Aliko Dangotes, and they want to be the Elvis Justice, and they want to be the Barack Obamas, and they want to be the Joe Bidens by a twinkle of an eye. But it never works like that. When I get into the real estate journey, I'll give you a reason why you need to make your goals achievable. R on the SMART goal is relevant. How relevant is what you're looking at? Is this the right time? Because I get people text me every time, especially after the first training in Ghana. I get people text me, I'm 18 years old and I'm in school, I'm in level 100, and I want to start real estate investment. Now, it's a good dream, but you see, how relevant is that currently to you? For me, the only relevance or the only information you currently need about real estate investment is to have knowledge about it, to know that there's something like that exists. But truth is, I'm going to tell you, save your money and try and increase yourself. Like, you need to know if this is really relevant to you at this moment. Is it worth the while? You're here on YouTube, you're watching all of us here on YouTube. Like, is it really something that is relevant to you? And then I'll move to the last word, then I'll go straight into real estate, which is the T on the SMART goal, which is time bound. You need to give yourself targets. What can I do 6 months from now? So maybe you're a new trader, you're somebody who's an amateur, you're somebody who it's a professional. Set targets for yourself. Now, what can I do 3 weeks from today? Now, after this conference, after this training section, what else am I going to add up to what I already know, or what I can do, or what can I do for myself today? Because today is a new day. Even though we are in a certain date here, people in Russia are in a certain time, people in the US are in a certain time, people in the UK are in a certain time. And so if you don't do it today, when else do you want to do it? So you need to tell yourself, set the goals, and then be time bound about the goals. So that's the SMART goals. You've heard this over and over again, but please keep it in your head, because there are things that, you know what, you're going to need every single time of your life. Now let's move into real estate. Everybody's making noise about real estate. People are really saying, why the noise about real estate? I tell people there are 3 industries that if you're involved in as of now, I'll be so happy with you. Now, if you are in the tech world, which most of you here are in, trading, the foreign exchange, trading and all of that, tech by way of website designing, software coding, and all of that, the tech world, or the real estate industry, and the oil and gas industry. Now, these 3 industries, anybody, especially for us, the young ones that are involved in any way in this industries, like I say, kudos to you. It's a good path, it's a challenging path, but the benefits you're actually going to get from this industry are something that are very promising. Real estate is just we trying to add up to what God has done. So if you're Muslim here, you believe in Allah, you believe in God, you believe in Jesus or whatever. Now, whatever you believe creation or nature offered to you, real estate comes to improve on it. So real estate is actually improving on creation. And so there's the earth, but people decide to do roads, people decide to build houses, people decide to put companies on this land. And then that is where real estate is. So we have 4 types of real estate. I've done that before: residential, commercial real estate, industrial real estate, and land real estate. Let me focus today more on residential real estate. Now, before I go on residential real estate, please, if you're on YouTube, I want you to comment and clap right now, because you see my background. That's my dream. That's my dream for this year. Yeah, Swenga, Kira, Kema, everybody. Dr. Lawrence, you guys need to help me to buy this thing. Ken Swinger, everybody, for help me make a buy this justice. You need to help me to buy this thing right behind me. So yes. Now let's delve straight into residential real estate. You've heard people saying that I want to buy a house, I want to live in an apartment, and all those kind of languages are what is good or termed as residential real estate. I would advise anybody who is trading to have something else to invest the money into, because few weeks ago or a week ago, my own friend Elvis Justice, I saw him go into negative 47,000 or something, and I'm like, like, what is happening? Like negative 47, I'm going crazy. Then I asked myself, so if he never has any other thing where he puts this money, and all the capital that is generated from the trading business is actually being put back into trading, and he had lost everything. So it doesn't mean that Elvis's life was going to be in the reverse term 2.0. That's a big question you should think about. No business person will make lots and lots of profits from a certain business and will still want to stack that amount of money into the same business. Yes, you need to give some amount of money to the same business, but you need to have other avenues where you will invest that money. And for me, I always tell people, do real estate. Why is it real estate? The first word in the whole two-word, real estate, real. The word is real estate. Real means that these are buildings you can touch and you can feel. When you buy a land, you can actually see the land. It is located there, except if you're in a country like Ghana where landlords will come and beat you and all of that. but you know, these are things that if you go the right way, lands commission, everything, you register them, these are good investment opportunities that I would advise everybody to go into. So it's real, it's something you can feel. Now, estates, a lot of buildings together. How do you even invest in real estate? People call me and they're like, I just have $10,000. I just have $5,000. Can I invest in real estate? And I said, yes, you can. You know why? Because you're only thinking about yourself. When you want to do real estate investments and you don't have a large sum of capital, what you need to look at is a partner. Because even in your trading academy, I know that Yal Swinger sometimes calls Elvis. Luther King or Ken Swinger sometimes will call Kira, Charlie, what's up? I want to hit this number of pips or something. Well, how do I do this? What do I do? Then the man himself, Yal Swinger, will give you some directional bias, something somewhere, then you hit it. Do you understand? So there's this partnership thing that we even do in our world as traders. And so when you come to real estate, you don't necessarily need all the amount of money to start. Look for a partner, look for somebody, come together, join forces. Then you say, you know what, we're giving ourselves a target. That is why it's very essential that I share the SMART goals. The T on the SMART goals said time bound. Give yourself a time of maybe 6 months. We are going to raise 20,000 USD to invest in this property. This one makes a profit of 20,000. That one makes a profit of 20,000. You have 40,000, which can currently buy you like a studio in Ghana. And then you rent the studio for $1,000 or something. That property against your name. For example, my name, Kwesi Desmond. If I have a property against my name, anytime I go to my bank and I declare that asset to them, it opens up my equity stand. That's a conversation I'd like to go in later on. I see somebody in the comment section asking about, what did I say M meant? I said M meant measurable. M meant measurable. So today I'm going to keep it very, very brief, because for a lot of you, you are here to make sure that you get some trading skills and trading knowledge. But all I am here to announce to you is that the business of real estate is very important. You cannot invest the trading. Please take this from me. You should never and ever make all the money from trading and invest all. Please note my words, and invest all back into trading. Please, no, don't do that. Put some of the money back into trading. Look for other avenues to put your money into it. I am always glad and always open to share with people the knowledge about real estate. And so that's why I have a YouTube channel. So before I sign out, you can actually subscribe to my YouTube, or after, you can look for me, COD Realty and Properties. So COD Realty and Properties, COD Realty and Properties. COD Realty and Properties on YouTube. On YouTube, you can find me. I've done a whole video on investment, why you should invest, especially in Ghana's real estate market, where Ghana is now becoming like a December in the whole world. We had people like Chance the Rapper coming to us in Ghana. We've had Beyonce pass through the year of return. We've had all the guys across. Everybody has been to Ghana. Like, I don't know if you've not been to Ghana. You should be in Ghana. And Madam MC, please try and be in Ghana. Ghana is a lovely place to be and a lovely place to hang out. And so that video is right there on my channel. Now, my Instagram handle, please, my Instagram handle, very necessary. I want to see it going up right now. Is ITZ underscore COD1. ITZ underscore COD1. That's my Instagram, ITZ underscore COD1. And for those of you that are still on Facebook, yeah, we need to be on Facebook. It's COD Realty and Properties on Facebook too. COD Realty and Properties. So YouTube, COD Realty and Properties. Subscribe to the channel. Go and enjoy all the lovely home tours I've had. IG is ITZ underscore COD1. And for all your questions, you can actually send them to me in my DMs, or you can ask on here when it's time for questions and answers. Ladies and gentlemen, the name is still Kwesi Desmond. I couldn't get the time to share a lot of things with you, but trust me, I want, and I'm always happy to share with people. So just take your time. You can hit me up anytime. Let's have great conversations. And until next time, like I always say on my YouTube channel, it's au revoir. Thank you.
Okay, guys, please ask your questions below for COD, and he will now answer them. Maybe you have some.
Okay,
We're waiting
yeah,
for
so
you.
the question, do you have any questions?
Okay, guys, please ask your questions below for COD, and he will now answer them. Maybe you have some.
Okay. So I'm seeing a question on YouTube. Somebody is saying that, bots, please, is Airbnb real estate? Airbnb. So Airbnb is a website. Airbnb is an agency that has created a website that allows people who are homeowners to put on their properties. So you can actually. The question, do you have any questions? To put on their property. So when you're a homeowner and you have a property, East Legon Hills, East Legon, Cantonment, Laboni, you just go there and then you put the property on display there with a price point. And so that's a form of marketing platform that allows you to get to the end user through a website platform. So yes, of course, Airbnb, it's a marketing website. So I'm seeing a question on YouTube. Somebody is saying that, boss, please, is Airbnb real estate? Airbnb. So Airbnb is a website. Airbnb is an agency that has created a website that allows Do we have another question, please? Can I buy a property in Ghana when I'm from another country? Yes, please. You can buy a property in Ghana from another country. My bank account is waiting for you right now. My bank account, you can send me money from everywhere and anywhere in the world. So yes, of course, I can represent you, and then we can buy the property for you. Some say real estate is hard to start in Ghana. Okay, so real estate is hard to start in Ghana. It depends on where the person is sitting, and it depends on how the person wants to start. Now, there are lots of us that want to start businesses without consulting. You know that if you want to do this trade thing, you have Kema, you have Yaswinga, you have King, you have Dr. Harmonix, you have Kira, you have Elvis Justice to go and learn from, and you decide not to consult and to start. And because you feel like you have some amount of money, you start on your own, it's going to be very difficult. So you need consultants. Once you have consultants that are helping you, then you can quickly do it. It's a profitable, please take this from me, real estate in Ghana is profitable. The developers, which I don't want to add myself, are making over 100 to 150% of profit. Note this. And I'm going to do a video on it and give you a better understanding. Yeah. I think the last question. Okay, people want me to go through the SMART goals for the last time. So I think I'll just do the SMART goals and that'll be my last because the other speakers are on fire. I can see how some directional bias go pie for one side today. So S, specific. M, measurable. A, achievable. R, relevant. T, time-bound. Thank you so much, Elvis Justice. Thank you, Yao Swinger. Thank you, Ken Swinger. Thank you, K Matrice. Thank you, Kiera. Thank you to all the amazing speakers. And thank you to everybody watching. I've seen great comments on YouTube. I love you guys so much. Let that same love be expressed on Instagram and on YouTube. Instagram, ITZ_COD1. On YouTube, it's COD Realty and Properties. And until next time, again, it's au revoir, guys.
Okay, thank you, COD. Now, Kema is finally in touch with us again, and now we are ready to continue listening to his presentation guide for traders of all levels. So, Kema.
Okay, so sorry about that short glitch. I have it fixed now, so I'll be switching back to the chat so that we continue with the beginner session. Please, if you don't have a note, get one, get a pen, and then jot down a few things, right? So I'll be showing my screen now. Okay, so I guess everyone can see my screen right about now. All right, so let's move on with this. So I was saying that unlike the other financial markets, like the New York Stock Exchange, London Stock Exchange, the Forex market doesn't have a physical location or a central exchange point, right? It is considered what we call OTC, over the counter, owing to the fact that everything is run electronically. You see behind your PC, behind your phone, and that's where you make all the necessary transactions in Forex. And it runs for a period continuously for 24 hours. The reason is that we are in a world where we don't have the same time zones. When we have daytime here at another jurisdiction, there is a nighttime. And so when our businesses and major banks and major institutions are actually working, other countries' major institutions are asleep. And when they come awake, ours also goes to sleep. So 24 hours, still value increases and value drops on the market. And because we are working with currencies, it works along very, very perfectly. Now let's go on to the next slide. So we have sessions when we are trading the Forex market. This is very important. We have sessions, right? So we have the Asian session, just like I was just saying. We have the Asian session, we have the London session, and we have the New York session when it comes to the Forex market. Now, this is because of the different time zones. When we come to the Asian session, when it's around 10 p.m. to 7 a.m., the market is thriving there, because their businesses are open, their transactions are, running. Major institutions in this jurisdiction is actually going on, and so still prices would be decreasing and increasing. Now, the volume that comes with that, right, would be determined by how much people are on there trading at that particular time. I'll be getting. And so there are a lot of times when we have market moving at a very fast rate. Whenever you see market moving at a very fast rate, just put in mind that, one, there is something in the world, probably a geopolitical event somewhere that is affecting the market, or two, there are a lot of traders on the market as at that time, right, trading the Forex market, which is causing the Forex market to move in that manner, right? And so we have the Asian session running from around GMT 10 GMT all the way into 7 GMT. We have the London session running or taking over from that 7 GMT all the way into 15 GMT. That is around 3 p.m. right? In my 00, that's the London GMT 00. And then we have the New York session running from 1 p.m., when the daylight savings is not on, and 12 p.m. when the daylight savings is on, all the way into 8 p.m., right? And so these are the major Forex trading sessions that we have: Asian, London, and New York. The Asian is made up of the Sydney and the Tokyo market, right? And so interesting fact about the timings. London, New York, we have what we call the London, New York overlap. This is the particular time when we have some of the London institutions still in the market about to close, and we have the New Yorkers also coming in opening their major institutions, major banks, traders coming in to make transactions. And so this is an overlap where there are few people in London and there are people in New York as well. So at that moment, we have a lot of movement on the market with respect to the fact that there's a lot of people on there, what we call trading volume, right, being generated over and over around that region. From around 12 p.m. all the way into around 4 p.m. we have that London, New York overlap, right? So it is an interesting trading time for a lot of people who want, fast money on the market. COD was talking about Elvis taking 40-something thousand hits, but the same way, interestingly, he can make triple or quadruple of that amount in that same time, right? So it doesn't really matter to him if he loses that much, but he knows that he would definitely make it back, and I'm sure by now he has already made it back, right? And so the Forex market is really, really interesting with respect to the fact that it is a profitable adventure for anybody. Now, Sundays market opens around the PM 9 p.m. It does not mean that you have to go on trading, right? This is the time that market somewhere in the world transactions have started beginning. And so 9 GMT we have the market opening and then beginning to unravel gradually. Fridays after 3 p.m. Usually we stay clear of the market because this is the time that people banks are wrapping up for the weekend. Saturday is coming, and so there are a lot of balances going on, and then it is good to stay clear of the market if you are an introducing trader or a beginner. Bank holidays as well. There are major bank holidays, when they can state to you that today is a major bank holiday for JPY or GBP. It means that at that particular point in time, all Great Britain banks are closed, or all Japanese banks are closed. Interesting time. So all this, it's very easy because you have all these informations given to you freely on the internet, and I would point that out very soon. So how do you make money on the Forex market? The objective of trading Forex is definitely to exchange one currency for another. And in that respect, everybody is looking forward to make some money. You are listening to me right now because you want to make money off the Forex market. Yes, so that is the main motive: make money on the Forex market, right? How do you make money? You are exchanging one currency for another, and when there is a difference that goes in favor of your speculation, then you make profit off of that. I'll explain that into details later on.
right? So in the market, we buy and then we sell. Once you buy, you are saying that that particular currency that you are buying would increase in value as compared to the one that you are selling. Take the market, take the Forex place as a marketplace, just like a marketplace. When you go on there, you are holding what? One thing to go and exchange for something else. On the Forex market, you are holding one currency of one particular economy to go exchange for another currency of a different economy, right? And so in doing that, you are looking forward to what? To make profits in that exchange, right? Yes. And so currencies are always quoted in pairs because of how they are transacted. You can't pick one currency from one economy and exchange for the same economy. Definitely you have to exchange for a different economy, right? And so for instance, the example I've put on there, we have what? The pound against the dollar. It means that at this particular moment, we are exchanging the Great Britain pound for the United States dollar, all right? And we have what we call base currency. So at that moment, whenever you are trading, right, you are doing something simultaneous. You are giving out one currency and taking back another currency. It means that you are selling off one currency and at the same time, buying another currency. So it's simultaneous. It happens at once, just as you are you are trading, right? Now, the first listed currency is what we call the base currency over here. When we pair the currencies, this is what we call the base currency, always the first one. Then the one that comes after is what we call the quote currency. Now, the base currency is the basis for every transaction that we make. It means that if you make a decision to buy, you are buying the base currency because that is what belongs to you, right? And you are simultaneously selling the quote. And if you make a decision to sell, it means that you are selling your base currency. I'll be getting me. So at every point in time, the base currency is the basis for every transaction. A trader will buy a pair if there is the belief that the base currency will appreciate or gain value relative to the other currency that is going up against. And a trader will sell a pair if there is the belief that the base currency, the one that belongs to them, would actually depreciate or lose value relative to the one that we're going for. All right. So when do you buy and when do you sell? We have two main areas, where we buy and then where we sell. We have traders who are for technical analysis. We have traders who are for fundamental analysis. And we have traders who are for both. There are traders who make speculations on the market based on technicals and also fundamentals, right? Yes. And then let's go for technicals. When we say technicals, basically every trader that studies price action or price movement is a technical trader. When we say that you are studying price movement, we are talking about a few things. So now let me just bring this in here. So in the technical world, we have the chart, all right, the price movements are represented in different ways. It can be a line chart, it can be a bar chart, or it can be a candlestick. Now, in today's world, most of us traders use candlesticks because that is what we can understand, right? That is what we can understand and read meaning into, right? Yes. And so we have traders who look at candlesticks to make decisions on the market. We have traders who look at what we call a trend to make decisions. And also these traders who look at trend often use something that we call a trend line to also make decisions on the market, right? We have traders who look at what we call chart patterns, whereby they are looking at formations on the market, all right? Probably pictorial views. Whilst price is moving upward and coming down on every transaction that is placed on the market, it forms on the chart, usually a pictorial view. And people study these things to make decisions on the market. So we have a lot of people doing technical analysis with different things that they look out for on the market, right? We have people who use what we call indicators, basically using things that will indicate whether price is going up or coming down. And based on that, they'll use that to make their decisions on the market. And we have people who look at price for what it is actually doing on the market and then they will use that to speculate the market. So technical analysis is really, really broad. And every trader, all the traders, wonderful traders and wonderful speakers we have out there have their own genuine way of approaching the market. Some use the trend line, some use the chart pattern, some use candles, some use indicators, right? Yes, each one of them has a unique way of trading the market. Some have made it so simple, and then, you know, their objective is to make money on the forex market. And so if you are making money, then you are doing the right thing, all right? And so then we move on to the next thing, which is fundamental analysis. Now, every economy or every currency belongs to a particular economy. Every currency belongs to a particular economy. And so if we are talking about fundamentals, people who do fundamental analysis basically focus on the economies that they are trading, right? Based on the two different economies that they are trading, they focus on the overall state of both economies. Then, after they have made their respective analysis on both economies, they can tell which one is stronger than the other. Then they will make a speculation whether to buy or to sell on the market. So some of the few things that fundamental traders look out for is productivity. We have some of them looking at employment. We have some of them looking at manufacturing, international trade, interest rate, right? And interestingly, Forex is so simple. I tell people Forex is so simple that there is information, you know, out there for every trader. If you're a fundamental trader, there is a site that allows you to be able to find all the news, and it is what we call the forexfactory.com. Now, this site gives you all the information that you need on fundamentals on all the economies, and then you can now use those data that you get to speculate whether price is going to go up on a particular pair that you choose, or price is going to come down on a particular pair that you choose. Now, this is an example that I usually give people that I teach, people that I talk about fundamental analysis to. If the recent COVID that came, right, for example, it hit US, right, what that will mean is that US is going to go under a lockdown. And if US is going to go under a lockdown, then it means that employment rate is going to drop because people are going to be laid off from their work, right? And if employment rate drops, it means that there is not going to be a lot of manufacturing, which means productivity relatively is going to drop. Now, when it comes to international trade, people will no longer want to come take goods from the US again. Why? Because there is a disease that is contagious. And so US will rather be importing rather than exporting. It means the revenue that US would have been making by exporting more of their products would have dropped. And, you know, relatively, it comes with a whole lot of ripple effect. And so you realize that the value of the US currency will relatively drop with all of these petty things happening so fast just because a disease hit a particular country. This is an example or an overview of how fundamentalists do the analysis on the market, and based on that, they speculate the long-term move on the market. Now let's move on. There are four main styles of trading. There are different types of traders when it comes to the forex market. There are the people that we call the scalpers. There are the day traders like Mr. Yao Swinger. There is the swing traders like myself. We have the position traders as well. Now, let's delve into these four aspects and then let's see how exactly they work, right? The difference between the trading style is based on the length of time that a trade is held for, right? So now choosing a trading style requires the flexibility to know when the trading style is not working for you. All right. And also it depends on being consistent in a particular area. So let's take scalping. That's the first one. A very rapid trading style that involves an attempt to make profit from very small price changes in the market. This means that people who are scalpers tend to place lots of small bets throughout the day, and they must sit by their machines to monitor those bets because they are very, very short-term trades, probably minutes. So scalpers think in minutes. Day traders think in hours. We have swing traders thinking in days, and we have position traders thinking in months and years. So put that in mind. Now, scalping is best suited for the active traders, people who are able to make immediate decisions and act on those decisions without hesitation. Impatient people often make the best scalpers. If you are too patient, scalping is not for you, right? Because scalpers expect their trades to what? Become profitable immediately. And they will exit any trade that is what? Trying to confuse them, right? Now, being a successful scalper requires focus and concentration. So it is not suitable, for any person who is easily distracted or who finds themselves daydreaming during what? The time that they are supposed to be what? Trading. All right. Now let's go to day trading. Interestingly, day trading as a style of trading is more suitable for traders that prefer opening and closing their trades within the same day. They want to know the outcome of the trades that they place within a particular day. Am I making a loss today or am I making profit today? If I make a loss, we move on to tomorrow. If I make profit, let's see what tomorrow brings. That is what day traders look at. Many day traders will not consider leaving their what? Positions overnight, because some of them cannot sleep, at night, knowing that they have an active trade running, right? Many day traders will not consider scalping as well, because they will not have the time to enter a trade and what? Constantly monitor this trade. So day trading is for people like workers, right? Students. You are going to school, you are working, you don't have the luxury of the time to constantly what? Keep on checking your phone to see if, your trade is actually running in profit or loss, right? You take day trades and then you allow the trade to what? Actually run. And, within intermittent, like let's say 4 hours, you come to check the trade and see the outcome of the trade. That is how day traders what? Function, all right? Swing traders almost always hold their trades overnight. So it is not suitable for people that will be nervous holding a trade while they are away from their computer or their phone. It is compatible with people that have the patience to wait for a trade to materialize to the speculated price level before closure, right? It is a kind of trade that could be more than a day, right? You could have to hold a trade more than a day or to sometimes even a week, all right, before you take what? Profit. Because for swing traders, the profit margins are usually wider. Swing traders are looking for 400 pips, 500 pips from the market within a week. Day traders are looking for the quick 50, the quick 100. Sometimes, as lucky as we are, we could hit what? 200 pips within a particular day on a pair that is really, really fast moving. That is why it is important to look at the 8 major pairs that we were looking at, because they are constantly transacted and it causes the market to be what? To be moving at a fast rate. Swing trading generally requires a larger stop loss than a day trading strategy. So the ability to keep calm when a trade is against you is a necessity in swing trading. Now let's look at position traders. Basically what we call the long-term investors, right? They often have to take the trades and then hold on to those trades for several months, sometimes even years. Therefore, a position trading is not what? Suitable for the most patient. It's only suitable for the most patient people and least excitable. When we say least excitable, people who jump at every pip or at every, $1 that they see on the market. Position trading is not for you, right? The targets are usually several thousands of pips, right? So if your heart starts beating when you see, profits just beginning to move, in a few counts, then position trading is not for you. And if you are an individual whose opinion sways very easily, you hear buy from here, you are with a buy. The next day, next 2 days, you are with a sell and you are going here. Position trading is not a ball game for you. Now let's move on to some of the words that you will hear Forex traders use on the market. Probably you are a friend of a Forex trader and they have been using a few words that confuses you on the market, right? Yes, I'm going to explain a few of them to you and so that you see how easy they are to understand. We have long, short, bull, bear, leverage, balance, free margin, take profit, pip, pipette, bid, ask, spread, margin, equity, stop loss, lot size, and slip it. Now let's take long and short. Right? Basically, when we talk about long and short, it is what? Either you are going upwards or you are coming downwards. So when we talk about bull and bear, it's either you are going upwards or you are coming downwards, right? And so if an individual believes that the price is going to go up, it means that they are what? They are bullish, all right? Or they are going for the bull market. And so if they actually pick a trade on the market, they are going what? Long. And if an individual thinks that the market is going to come down, they are bearish, all right? And if they actually pick a trade for a sell, it means they are coming what? They are coming short, right? So short is sell, long is buy, right? Put that in mind. And the general direction that the market is actually moving, the general direction that the market is actually moving is what we call a trend, right? Yes. So let's move on. Now, if you expect price to go up, you would buy. And if you expect price to come down, you will sell. There's a stop loss level, there's an entry price. The entry price is up, the particular price point where you are what? You are entering the market so that you make your profit. So if you speculate that the market is gonna go up and it actually goes up, you would have made profit on the market. And if you speculate that the market is gonna come down and it actually comes down, you have made profit. But if it goes against you, that is when you use the market. Interestingly, Forex allows you to be able to monitor how much you lose on the market with a feature that we call stop loss. And so you set the stop loss on the market so that as a trader, you tell the broker, right, which we talked about previously, that you have to log in through a broker to have access to the market, right? So you are telling the broker that out of the little amount of money that I have on the market, I want to lose only this amount if I'm actually wrong on the market, right? Yes, so that is the feature that we call the stop loss level. And the take profit point is you are telling a communication to the broker that if price should actually go in my way as I have speculated, this is the point where I want to take my trade off. Whether it goes more or not, please take me out of the market. All right, so put that in mind. Long is buy, and then bullish, and short is sell, and bearish. Now, with this particular portion, which is the leverage, I'll leave that part for Yao Swinger to take, just about 10 minutes of his time to go through the leverage before, he goes through. I don't know if Yao would like to do that. Yao.
Yeah, Kima, can you hear me?
Yes, I can hear you.
Okay, so if you don't mind, don't let me use your screen, and then for time's sake, okay, I actually cut code. So if you don't mind, I think they'll be following us. So the next Psychology Friday, this part of the session is mathematical, right? So
yes, mathematical, yes.
Yes, so obviously I'll just leave the leverage, margin, free margin.
Free margin, yes.
Just leave them out, and then the next Psychology Friday, the next Friday, I will take the first 20 minutes to explain these concepts. So I'm sure
awesome.
they'll all follow, and then we can take that. So just you can just explain with just the words, but then for the mathematical part, I think we'll do it.
Okay.
Thank you very much.
Awesome. All right, guys. So with respect to leverage, it is easy to understand. When it comes to the Forex market, it's basically a ratio of transaction size, right? Now, the example that I give, let's say Yao Swinger and I are in the same school, right? Yao Swinger and I are not too much brilliant students. Please, it's the opposite, but for the sake of the example, right? And, Yao Swinger's dad is the vice chancellor of the University of Ghana, right? We know that we are getting Fs, but we know that there is a possibility that Yao Swinger's father can grant us the opportunity, even with our Fs, to enter the University of Ghana. It means Yao Swinger's father becomes a leverage, right? For us, right? And so when it comes to the Forex market, leverage is basically a bigger power that is being handed to you, even though you have a smaller You have a smaller power, right? So you are using a small power to control a larger portion. So on the Forex market, brokers allow you to have what we call leverage by using your small capital, whether you have $50, whether you have $10, you can actually use that amount of money to control the market, like someone who is actually having $10,000 or $100,000 on the market, right? By placing big or huge what we call lot sizes. So after here, we will talk about the lot sizes, right? So the appropriate leverage for a trader to use varies based on few factors. One, the market's being traded, the account size, and the general experience in Forex. So if you're a beginner, Yao Swinger will talk about the leverage, on Psychology Friday, and you understand how exactly leverage works. Then now you will know that based on your knowledge in trading, what kind of leverage should you pick for your account. Now let's move on to the next. We have the lot size. On the Forex market, we don't quote money. We quote money only when it is coming into your coffers or going out of your coffers, right? But if you are placing a bet, if you are placing a trade on the market, we basically replace money with what we call units. And the unit is what we call the lot sizes. Now on the Forex market, $100,000 is equivalent to what we call 1 unit or 1 lot size. And when a trader uses 1 lot size on the market, it means every tick that the market moves, it brings you back $10, right? And then we have what we call the mini lot size, which is what, $10,000, represented by the volume or the lot size called what, 0.1. Every single tick, when you use a 0.1 on the market, takes out $1 out of your trading account or adds $1 on your trading account if you are what? If you are right. I'll be getting. Then we have the micro lot size, $1,000, representing what? Being represented by a lot size of what? 0.01 on the market, making 10 cents per what? Per tick or per price movement on the what? The market. Nowadays, most of the brokers do not have the nano lot size, but yes, still I'm going to talk about it. It's $100 representing 0.001. Mind you, there's 2 zeros after the decimal place before the 1 comes in. You make 1 cent per pip, right? That is very, very a little amount. And a lot of people, you know, the nature of humans is to be what? To be expectant of more. And so some of us don't really like going in for this. So it was taken off. And then when the leverage was also introduced, there was no reason for us to even use the nano any longer. And so we have what? Now we have standard, we have mini, and we have micro. Take note of these. 100,000 is to 1, 10,000 is to 0.1, and 1,000 is to what? 0.01, right? So the lot size is a unit measuring the transaction amount. Let's move on to the next. So margin will come with the leverage, and also the free margin will also come with what? The leverage. But let me explain what balance is. Basically, balance is the amount of money that you put on the Forex market, right? Yes. So whatever you have in your trading account, that is your balance. Now, your equity refers to your balance plus whether you are making a loss or a profit on the market. So your balance plus or minus what the floating what profit or loss. So if you are in profit, your balance plus the profit is what we call the equity. And if you are in a loss, your balance minus the loss is what we call your what? Your equity. And so if you close the trade at any point in time, whatever you have at the equity is what will replace your what? Your balance. It means that is what you have in your trading account at that particular moment. So free margin also, Yao Swinger will explain when explaining leverage as well as margin level. So I was talking about a tick in the market, making money by the ticks in the market. Those ticks that we have by price movement, if price moves from one particular point to another, you have been to Forex bureaus before where you exchange money exchanging areas where you have seen quotes, right? Price figures being quoted. So 1.3840, you know, and the whatnot, right? And so what it actually means is that is the quote, right? We have what we call the bid and then the ask price. The bid price is how much the broker is willing to what? To buy that particular amount, that particular currency that you are bringing in. And then the what? The ask price is how much the broker is willing to sell whatever you are coming in for, right? And so at that moment, we have what? We have one figure for the what? The bid, and then we have one figure for the what? The ask price, right? So buying price and then what? Selling price. And so when there is the number, the tick, right? Every movement on the market is what we call what? A pip. We have 1.3840, 4 decimal places. The 4 decimal place, the movement from 0 to 1 will mean what? 1 pip. And also the movement from 0 to 9, whereby this particular 4 will change to 3, will now mean what? 1 pip also, right? So whether it's going up or down, it's all what? A pip. But it is a pip against you or a pip for you. Now, when we talk about a pipette is a mere fraction of a pip, right? So usually some of the brokers quote the 5th decimal place. That is what we call the pipette, right? With the exception of Japanese yen pairs, right? Which actually quotes only 2 decimal places. So the 3rd is what we call the what? The pipette. But usually Japanese yen pairs, we have only 2 what? Decimal places after the what? The decimal point. All right, so okay. So when it comes to the Forex market, this is something that you would see, right? Trading on the Forex market. This is something that you see. On the PC, this is how it looks like on the PC, whereby you have an area over here showing all of the trading pairs. That's what we call the market watch. It shows all of the what? Trading pairs. So you can see here GBP, USD, Euro, USD, USD, JPY, all the trading pairs that you can what? Think of, right? And here it shows you all the accounts that you are logged into, and also what we call indicators on the market. I told you about indicators earlier on. People trade with indicators, things that indicate whether price is going to go up or price is going to come down. People trade with them. And some even indicate what the time, some indicate the number of pips on the market, some indicate the strength of the currency. All of these things, people take a look at them to what speculate price movements, right? And then we have the terminal where it shows your balance, your equity, and your free margin. Yes. Then this is the interface. We have what? This is what we call the candlesticks on the market, right? In present day, a lot of the traders use this. Very, very few traders are found using what we call the bar chart or the line chart, right? The line chart is basically just lines on the market representing where price is going, whether it's going up or coming down. But the candlesticks allows you to be able to see with every tick on the market what is actually what happening. So most of the traders use this on the market. So now let's move on. On the phone, this is how it looks, right? On the phone, this is how it looks, where we have the quotes, we have the chart, we have the trade history, and then the settings. So here you have all the what? The currencies that you want to trade, or all the assets that you want to trade. You can even add more by clicking on the plus sign here, and you can have it all here, right? Then we have the chart also here. You can see the candlesticks forming. The preference of the colors depends on you as a trader, you know, whatever you want to see on here, right? Yeah, so it doesn't really matter. Then we have the trades. Current trades that are what ongoing will show at the trade, right? Then at the top here, you will see the floating profit or loss. Then we have, you know, the settings, which shows you which account you are logged into. So on the phone, you can log into multiple accounts, but on the PC, you would have to download every broker and their MetaTrader. So on the PC, you can have multiple MT4s, but on the phone, you just need one MT4 and you can just click here and keep adding different accounts, right? Yes, over and over. So this brings us to the end of the beginner session in Forex. Any other thing that comes after this would fall under the intermediary and the pro courses, what learning how to actually, or what should you should actually look out for to trade the Forex market. And we have wonderful mentors on here having different wonderful strategies that they would speculate the market with, right? Day traders, swing traders, and what have you. You can contact any of them and they will do the honors of teaching you what comes after the beginners. All right. Thank you so much for having me. My name is Kema Trades.
Okay, thanks, Kemar. Guys, you can follow his Instagram and please ask some questions if you have them. Kemar will answer them.
Any question at all from anyone? Any question at all? I don't see any questions. Okay, so we have a few questions. Okay, so someone says, can you please advise us on leverages to take based on account sizes? So Yaswinga is going to talk about leverages on a Psychology Friday. So Friday, 10 a.m. You want to make the date with him by following him on Instagram at Yaswinga, and then you can have the opportunity to join in on the live, and then the first 20 minutes we are going to use that to explain what leverage actually is. So yes, please. Do we have any pip that is UES for the style of trading? Imanos Sabla, I don't really understand. I don't understand this question. Can we have the presentation you shared? Oh, yes. Anyone who wants to have the presentation I just shared, please follow me on Instagram. Hit me up, and then I'll I'll give you the slide, right? Okay. I guess I've explained everything that has to cover for a beginner session. All right. Thank you so much.
Thanks so much, Kemal. So Louis Bois also finally joined us. Today he will share his trading experience with you. So we are ready to listen to you, Louis.
Okay. Okay, thank you very much. Thank you very much. So my name is Louis Bois, and popularly known as Dr. Harmonics. And before that, Elvis, I hope you guys can hear me. Okay, so Elvis, I want to thank you for the opportunity to also share my story, how I started my Forex journey, and the journey so far till now. It's been very impressive. And to me, I feel I'm a living testimony of the Forex market. Now, I started my journey back in 2008 after, I think when I started my national service. So from school, from the tertiary, I started my national service. And that is when I started my Forex journey. So I started learning after my national service. Now, what happened was, in fact, the motivation that prompted me to go into Forex was that, see, I was eager to make money. After God, the next thing is money. I mean, you are the firstborn of your family and you want to make that big money. So I just went onto, let's say, Google, and I typed how to make quick money. Surprising, yeah? So I saw other channels such as stocks, bonds. I saw binary trade and all those kind of stuff. Now, when I started with HIVES, high yield interest payment. So at that time, there was this Ponzi scheme called Life Trust Invest. I didn't know it was a Ponzi scheme. So I invested, at that time, there was this electronic currency called Liberty Reserve. I don't know if people knew about Liberty Reserve. So along the line, I think the CEO was arrested in Costa Rica for money laundering or something. It was the Bitcoin at that time. So that was what we're using for this investment stuff. So I moved like, I think $500 to about $15,000. And I lost all this money. I lost everything. So I told myself, okay, so let me do a more legitimate stuff. Now I went into Forex trading. I started as a penny stock trader. So I started as a penny stock trader where I will buy very cheap assets at very low cost and hoping that I'll make that big returns. So along the line, I think I started my journey learning from Timothy Sykes. He was a penny stock trader. So he groomed me for some time before I started penny stock. But I realized that, in fact, Forex was the next big thing. It was seriously the next big thing. So I went into Forex. I started learning Forex. Around 2013, Christmas season, I moved about 7,000 to about 70,000 in 1 month. That is a risk taker. And do you know something? After 1 month, I blew everything. $70,000. A young guy who has gotten $70,000 and blew everything. And what I was lacking was the risk management. I was very skillful. In fact, I knew my act very, very well. But what I lacked was the risk management. How to pre-calculate my risk before I entered the market and other stuff. I learned a few stuff from Katilien. She also taught me a lot. And along the journey, it's been very, very impressive. Now, what did I do different? So I sought for mentorship from these people, and they helped me through the journey. Personally, I have MBA in finance. I worked about 8 years in the main banking sector. You can talk about 5 banks in Ghana that have been from a relationship manager to a new businessman. I've worked so much. Now, when the banking crisis started, 2017, I resigned. But I had this big skill. I didn't have money in my pocket. At a point, I had to be a reseller on eBay. In fact, I was selling ladies' bag. So imagine you are in your room and you get out. In fact, every time you be in your room and your landlord will be like, this guy, won't he go to work? Every time you see the room. What was I selling? Women bag. So I realized that no, I had this skill. I had resigned as a banker. What can't I do? So with no money, in fact, at that point, I want to be a little bit personal. You see, the feeling, you know this feeling when you don't have money and your babe, at that point, your babe, you'll be talking to your babe, you talk like 5 minutes, and your babe will be like, what are you saying? As if she never heard anything. So, in fact, after God, the next big thing is money. If I was having money at that time, see, I could have had anything that I wanted to have. So that became my motivation to succeed in this Forex journey. Now, 2017, what happened was I didn't have money. So I decided to, my first broker actually was eToro. This is a social trading platform where you chat with investors. So people were paying me $150, $200 a week for my signals. You can imagine. And at that time, what happened was there was someone who wanted me to teach him Forex trading, and he was willing to pay $5,000 a month. Eventually, personally, I'm the CEO of Gold Forex Institute and FS Gold Trading Limited. It's an upcoming brokerage. And this student later partnered me to start a brokerage. We started with the licensing Mauritius, and we're working on Cyprus when the COVID started. So we had to pause. For me, what pushed me to learn Forex was my why. Why do I want to go into Forex? That was the question that pushed me into Forex. Why do I want to go into Forex? How hungry I am, how hungry will I want to, am I in that I have to go into Forex? I told myself that there is no stepping back. I have to succeed no matter what. I set my goals and I achieved it. Around 2017, Ripple, I made from 7,000 to 128,000. I had my first, the biggest Forex hub in Ghana, the biggest Forex institute in Ghana. That was the birth of Gold Forex Institute. From nothing to something in 2017. So the journey has been very, very impressive. And the why was the reason. That was what pushed me to go into Forex trading. Now, I believe that as traders, to be successful is just about the mindset and attitude. Once you change your mindset and attitude, everything on the outside will change. And you need to exercise your mindset. You need to exercise it every day. How do you exercise it? You need to learn. You need to seek mentorship. You don't need to give up. You need to learn every day. And that also will take you that far. So my name is Dr. Harmonics on Instagram, DR Harmonics, Dr. Harmonics on Instagram, Facebook, Dr. Harmonics, and YouTube, Trading with Dr. Harmonics. You can follow me, and Tomorrow we have other strategies classes going on. You can DM me and I will help you through your Forex journey. I'm a living testimony of Forex. So anything, just DM me and I'll be willing to help you. Thank you very much. If there is any other question.
Okay, thank you so much. Guys, if you have some questions, please ask them. So. Okay. So the next speaker will be King Swinger. Yes. So he will tell us about some do's and don'ts that and trading advices. So please.
Hello.
Okay.
Hello, can you guys hear me? Hello.
Okay. We go.
Okay. So guys, my name is Luther Ken Osei, known as Ken Swinger. Okay. My name is much closer to your Swinger because he's a guy that I really look up to. When I started my journey, he's one of the first people that I followed on. I followed on IG. So he really inspires me a lot. So when you see me, people calling me Ken Swinger, don't be shocked because I really look up to that guy. And in this my session, I have limited time. I'll be talking about the do's and don'ts in Forex trading, and I'll be giving you guys a little bit of advice from my trading journey and my experiences. Okay, so there's a lot of do's and don'ts to the market, but then I've summarized the do's and don'ts into 7 do's and don'ts. I'm going to give you 7 do's and 7 don'ts. Okay, very simple. But before going deeper, like Kema Trader said in his session, that it's better you have a pen and a paper to write it down so that after this session is over, you can actually sit down and go over your trades. Go over the points that we said here, so you can actually reinforce it in your mind. So without wasting my time, I will start with the first do. Okay, you're starting with the do's, the things that you need to do to succeed in the Forex trading industry. Okay, and the first thing I would like to talk about is you having a trading plan. Develop a trading system or a plan. So a trading system or a plan simply means a series of rules that you abide by, rules that shows you when you need to buy and when you need to sell. Okay, don't be in the market trading randomly. Don't be trading anything that you see on the market. You need to have a specific setups. You need to master one setup. There's a lot of patterns like Kema Tree spoke about it. There's a reversal pattern, there's continuation pattern, there's head and shoulder. There's a lot of patterns on the market. There's a lot of repeatable patterns in the market, but you can't treat everything that you see. So that is why you need to be a master at once. Pick one pattern, create a system around it, and follow that plan consistently. Most of the guys most of the speakers that you see out here that are making consistently profits on the market, they don't trade randomly. They wait for a specific thing to appear in the market before they execute. And that is one thing as a beginner or intermediate that if you are still finding your way around the market, you need to put that in mind. And concerning about trading, creating a trading plan, there's a lot of people who think that they can actually have their trading plan in their head and be successful. One thing I always advise all beginners and even intermediate traders are type them. You can write them manually or print them down, print your setups and everything, bind them into a book, have it on the table, go through every single time that you trade. I've spoken to a lot of traders and I asked them, do you have a trading plan? I said, okay, yeah, you have to. Where is it? Say it's in my head. No, don't do that. It's really a very bad habit. If you really want to reinforce your system in your mind, print it down, keep it in front of you. Before you start any week, go through your trading plan and make sure you are always, or you have what you before you actually take any trading in the market. Okay, so the second rule that any trader also have to keep in mind is practice, 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 practice. Okay, practice, 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 practice. And one thing I would like to say about you practicing as a trader, LeBron James, or imagine the number of layups LeBron James have to take before he can be playing at that high level. That is how we as a forex traders, we need to practice. Someone can just backtest for like 1 month and the person is all over the place. The person thinks he has figured everything out. Trust me, it's not enough. Give yourself time. Don't rush the process. Take your time to practice. If you are under your strongest mentorship, Flash CP mentorship, or whatever mentorship that you are under, after you are done learning from your mentors, don't practice for just like a month and think you can trade like Yao Swinger or you can trade like camera trees. No. These guys have used years to master their craft, and you think you can come into the market and use like 1 month or 2 to trade like them. No, it's not. It's nearly impossible. So take time to practice. And like I was using the basketball, even see Ronaldo as an example. Imagine the number of training or the number of one style Ronaldo has to learn for him to get to the level that he is right now. He took time to put in the work. And as a trader, give yourself time to grow. Practice, 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 practice. Give yourself. There's this thing about traders that whenever they come into the market, they are eager to make something. And these things is really killing the careers of a lot of beginner traders. Take your time, because they didn't take time to practice and master the craft. Immediately they see their swinger driving his car and all that, and they start with 1 month training or 1 month practice, and they think they can trade like your swinger. No. Put in the work. Take your time. Give yourself. I always say that after you're done learning your strategy, give yourself at least 6 months to master the craft, to master the strategy that you've learned. Take your time to practice it. Don't just do any shoddy work and think you can be consistently profitable. And one thing I also like to add concerning you practicing is, we are all into this forex industry to make consistent profits, not making millions one day and we are done with trading. People like the Yasunga, Kema traders, and all of us. Personally, I can speak for myself personally. I intend trading for a very long period of time. So since I have that kind of mindset in place, I have to make sure that I'm building the right attitude, or I'm practicing in a way that I can trading consistently and making constant profits. Okay, so if you're in the market to make consistent profits over a period of time, you need to take time and practice your craft. Okay, so let's move on to the next point. The next point is manage your expectations. Okay, most of us come into the market with wrong expectations. They have very bad expectations. Okay, and it's not your fault. Okay, most of the beginners, it's not your fault for having wrong expectations coming into the market. You see most of the big guys, living their life, and whenever you come to the market, you also tend to have some different mindsets coming into the market. It's possible for you to live that kind of life, but then the person that you are looking up to spent a lot of time practicing, and putting in the time to get to where it is right now. So when you come into the market and you have wrong expectations, it really destroys your trading. Okay, it really causes you to be emotional as a trader. So take your time, give yourself time to learn and manage expectations. Don't expect anything from the market. Okay, don't expect anything. And even at the other side, at the other flip of the coin on managing expectations is, whenever we are taking a trade on the market, we put our dreams and our aspirations on one setup, thinking that because this setup is looking really, really good, the person will put all his expectations on the setup, and the setup might fail. One thing that you need to have at the back of your mind is, no matter the confluences you have gathered for a particular setup, it can still fail, because there's a lot of unknown variables that takes place in the market. So don't think that because you have a very good setup, you are going all in. And sometimes you have to go all in, but you have to make sure that all in quotes, that all in they are going is an amount of money that you are willing, or when you lose, you be comfortable. Okay, so managing expectations comes in so many ways, but then make sure that you don't project your experiences in the market and don't expect anything from the market, and make sure you're always in your lane. The fourth point I also like to talk about is, think of protecting your capital. Think of protecting your capital. This is something most traders fail to do, because they are always in making money. But if you don't take care, you won't be constantly profitable. Now ask yourself this question. Assuming if I give you $1,000 account, $1,000 trading account, how long can you sustain that account? Some people, they are very, very profitable, but when you give them $1,000 account, they can't sustain it for long, then they will end up losing the account. So because they don't know how to protect their capital. Guys, protecting your capital is something that is really, really important. I don't even know how to describe how important protecting your capital is. Learn how to protect your capital. If you don't know how to protect your capital, trust me, you won't last in this game. Always learn how to that. No matter the profit that you have, learn how to protect it. If you can't protect $100 account, you can't protect $1,000. You can't protect $1,000 account, and it goes from there. So think of always protecting your capital by managing your risks. And Kira Forex is here to give us an in-depth explanation about risk management. So I don't want to go deep into that. The next point I also like to talk about is learn how to take profit. Okay, learn how to take profit. From my own experience, there have been times where I have made serious amount of profit and I lost everything back to the market, or I need to trade at break even. Okay, and Kemba Trader was trying to explain the part on equity. Equity is your balance plus your profit or loss. You get me? So if you're making a profit, and since you haven't closed that trade, the money is still not in your account. Okay, the money can still go back to the market. So always learn how to take profits. Take profit, take profit when the market makes money available. No matter how small it is, just learn how to take profit. Whenever the market moves into your direction in a few pips, close some down and allow the rest to run. And these things, they help your psychology a lot because you have that experience of winning. Most traders don't have that experience of winning. They don't know how it feels to win. Okay, so if you want to practice how it feels to win as a trader, learn how to take profit. When the money makes money available, take some partial profits and allow the rest to run. And even if the market comes back to take you out on a loss or on a break even, at least you still have something. Okay, and these small profits that you take will go a long way in keeping your account. Okay. The next thing I also like to talk about is, which will be the fifth point. Okay. The next thing I also like to talk about is text your emotions. Okay, and about emotions, it has to do with the psychology. Okay, so I'll just hit on the surface and the Asunga will come and give us an in-depth understanding on what it means to handle your psychology on the market. But then one thing you have to keep at the back of your mind is learn how to manage your emotions. Managing your emotions is really, really crucial. And the reason why most traders get emotional over trades is, one, they didn't risk well. They over risk. They risk more than what they are capable of losing. And when you're in a drawdown, you see the money that you stand losing. That's when most traders freak out and they get emotional over trades and all that. And one other point that makes traders also get emotional is they think they know what is going to happen next. Trust me, no mentor, no guru in this world can tell you that I know what is going to happen next. Okay, we are all acting on our edges. You don't know what's going to happen next. You don't care whether the trade is going to be a win or the trade is going to be a loss. We are just managing. We are just acting on our edges. Okay, so if you have an edge in the market, don't try and have that mindset of you knowing what is going to happen next. No one knows. Okay, no one knows what's going to happen next. So just make sure you are always acting on your edges. Okay, so the last point I would like to add concerning the do's, okay, the things that you need to do as a trader is know your strike rates. Know your strike rates, okay? Every strategy has a strike rate. Some is 50% strike rate, some is 60% strike rate, some is 70% strike rate. If you're a trader and you don't know your strike rate, it's a problem because you won't be able to determine your long-term success in this game. You need to know that you need to test your strategy and say, okay, over a large sample of trades, I'm 60% accurate, I'm 50% accurate. And even if you are like 50% accurate, trust me, you can still be profitable on the market, even if you're 50% accurate. It means that whenever you're taking 10 trades and you get 5 correct and 5 wrong, you can still be profitable by going in for good risk to reward ratio. You get me? So always make sure that you know your strike rate, and you can do that through back testing. Okay, you can do that through back testing. When you back test a strategy over a series of trades, you will be able to know how accurate your strategy is in terms of percentage wise. And I mean, from there, you know that, okay, so out of a series of 100 trades, I'll be able to get 60 correct and 40 wrong. And having this kind of mindset in mind, it helps you not to get emotional whenever you are trading, because you know that out of 100 trades, you still come out to profitable. So even if you are in a 5 trade losing streak, you still have your psychology in place. You won't be all over the place thinking that, I mean, your strategy is not working. And this thing will help, or you'll be able to feel calm when you know your strike rate. You know that at the end of the day, you know your strategy is like 60% accurate. So you are definitely going to come out profitable when you take a large sample of things. You get me? So that is the 7 do's. Okay, let me go over it once again. I want to explain. I'm going to write once again so you get it. If you want to write it, you write it down again. The first thing is develop a trading system or a plan. The second thing is practice, 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 practice. The third thing is manage your expectations. The fourth thing is think of protecting your capital. The fifth, learn how to take profits. The sixth thing is check your emotions. Always make sure your emotions are in check. And the seventh thing is know your strike rates. Know how accurate your strategy works. Now let's go to the don't, the things that you need not to do as a trader. And after that, I'll just give you a few advice and I'll take any questions. Then move on to the next speaker. Okay, so I'll run fast with it. So the don't. Let's speak about the don't. Okay, the don't. Now the don't. This first point is most traders fail. Even I remember last week, I nearly became a victim of it. Don't trade without a stop loss. I mean, it's very basic, but most traders make that mistake. And the reason why most traders don't put stop loss is they think they know what is going to happen next. They think, okay, you know what? I know this trade is going to be a read, so I want to put a stop loss, because they think that when they put the stop loss, they might manipulate it and be taken out before the trade actually takes off to your direction. They will be like, you know, I'm not putting in any stop loss. I know your trade will go my direction. Trust me, you don't know. Okay, even if the trades take you out, if there's some manipulation in the market, and you have been taken out before the trade goes your direction. It's fine. I mean, they are all, situations in the market. So just accept it. Be at peace at this. Don't think that because you know what is going to happen next, you don't put a stop loss. These things can really hurt you. And if there's a news, I remember some time back during my trading journey, I placed a trade. I was like, no, I know this thing is going to go my direction. So I won't put a stop loss because I know the market is trying to manipulate me out before it goes to my direction. So I won't put my stop loss. And there was a news release. And rather unfortunately, the news made some huge, caused some huge movements on the market, and the trade was going against me. And by the time I came back to check my MetaTrader, I had already blown my account, okay, because I didn't put a stop loss. The news came to cause some huge movements against my direction. And my account was blown. Okay, so guys, always make sure whenever you are going into a trade, you don't know what is going to happen next. So make sure you always manage your risks, you put in your stop loss, and allow your edges to play out. Simple. Now, the second point of the things that you don't need to do as a trader is don't risk more than you are willing to lose. Most traders, they want to make millions overnight. And these things, they are things that, I mean, most traders are suffering to understand. Kema Trace, Elvis Justice, Yasunga, everybody will attest to this fact that they didn't make, or they didn't get to this level just over 2 months or 3 months of trading. Okay, it took time, through consistent profit that they were making, that they were able to get to this point. You get me? So don't think of making millions overnight. And at the moment you think of making millions overnight, that is when you over-risk. Okay, so make sure that even if you want to go aggressively on a particular setup, that aggressive is still amount that should, in case it goes against you, I mean, you're comfortable, you won't be all over the place. I mean, thinking that, I mean, you didn't do that, I mean, the trade went bad and all those kind of things. Make sure you're always managing your risks and the amount that you are losing, you're comfortable with it. Now, the next thing, also the third thing I also like to talk about under the things that you don't need to do as a trader is don't trade rumors. Don't trade rumors. Assuming you are under Yasunga's mentorship, and Yasunga is telling you that, you know, according to our directional bias, when the market gets to this point, you are buying. At the moment you hear Ken Swinger saying, no, sell good, then you are confused because you think that, oh yeah, Ken Swinger is also really a good trader, then you are confused. Please don't trade rumors. No matter how good that person you think is, don't trade that person's rumor. Unless you are trading the person's, you are trading the same strategy with the person. But if you are using a different strategy and another guru also says do this, that goes against your strategy, don't do it. Just be committed and allow your edges to play out. Okay. This is I used to, and all this point that I'm giving you guys, there's things that I've experienced myself. Okay, I sat down when Elvis gave me the opportunity to speak on this seminar. I sat down and reanalyzed some of the things, some of the mistakes that I did, and some of the things that I put into place that is helping me, and I came up with this point. Okay, so these are things that I've experienced myself. I can analyze my own trade during the weekends. I'm thinking of buying Euro USD. Immediately, I see another top trader that I will look up to saying buy UAs, even though I was looking to sell, then I'll change my bias. I'll go and trade that mentor's bias, and it will go against me. And my strategy, like my analysis actually played out. Okay. I mean, mentors, they also lose. They also lose. So just stick by analysis and don't trade rumors. Trade what you see on the market. The fourth thing I also like to talk about is overtrading. Okay, overtrading is a recipe for failure in trading. Okay, don't overtrade. Have a specific number of trades that you need to execute in a week. Immediately you get to that target, it's okay. Just stop trading. Okay, it's really going to help you a lot. And there have been times in a week where I've been really, really profitable. But because I switch into the state of euphoria, and what I mean by switching into the state of euphoria means, as a trader, whenever we encounter series of wins, we think that we are invisible in the market. We think that, I mean, we are that top good that we can never fail. Immediately you switch into that state of mind where you think you're invisible in the market, then you start committing trading errors. Okay, so make sure that you always have a certain number of trades that a certain number of trades that you want to trade every single week. So this week I'm going to take 10 trades, and after you are done taking those 10 trades, please be happy to stay out. Whether it was a profitable one or a losing one, stay out. These things will help you, I mean, stay in the game for a very long time by having a specific number of trades that you hit every single weekend. The same thing, it's also vice versa. Have assuming if you lose 5 trades in a row in a week, you stay out of the market for the whole week. Just be disciplined. Have a certain rules in place to guide you so that you won't do anything outside of what you are meant to do. Now, the 6th point I also like to talk about under the don'ts is don't be predictive. Don't be predictive in the market. Just act on your edges. I think I kind of flashed on it in the do's of what are the things that you need to do. Don't be predictive. Be reactive, or just act on your edges. Don't try and predict the market, because there's a lot of factors in the market that can make your setup invalid. There's a lot of factors in the market that can make your setup invalid. So don't try and predict the market. But if you have an edge, just act on your edges. Don't try and predict that, okay, I'm trying to, no. When you do that, you won't, it's like you are trying to gamble. No. As a trader, you need to trade like a casino. And trading like a casino is a whole different topic that I intend covering on my YouTube channel, Trading Like a Casino. And if you know how the casino operates, that they make consistent profits in this big casino like Las Vegas and the others, and you can apply their strategy as a trader, and you can make consistent profits on the market. Okay, so don't be predictive. Don't try and predict the market. If you have an edge, okay, whenever I trade, I want to see something like a head and shoulder pattern. Don't try and come in on the market and just be trading anything. Someone will see double tops, the person is trading. Someone will see head and shoulder, the person is trading. Someone will see the person is always trying to predict the market. No, only act on edges. So if you don't have an edge, if you're a beginner here and you're listening to me and you don't have an edge on the market, please, there's a lot of mentors in Ghana, of Justice, Swinger, Kema Trees, and a lot of guys who are really doing well in the space. I mean, talk to them, they'll guide you, they'll put you on the path where you have an edge, and immediately you have an edge, stay committed to it. Don't do anything outside your edge. If your edge is not present in the market, be comfortable staying out of the market, and you're going to succeed in the long run. Now, the last point, okay, I would like to talk about the 7th point under the don'ts before I move into giving you guys the advice, then the questions will follow, is don't quit. Okay, if you have started this trading industry, don't quit. Okay, that's why I say these guys like Swinger, Justice, these guys really inspire me a lot. Don't quit. Quitting is not an option in this game. Okay, and one thing that I always testify to trading, how trading has changed my life, is trading has given me or has taught me that kind of mindset that I need to be successful in every field that I find myself in. So now I'm very, very confident that even if I don't train, I want to go and play basketball. I know I can succeed in basketball because Forex has taught me that kind of mindset that I need to succeed in every field. Okay, so guys, don't quit. Quitting in this game is not an option. Always make sure that you are always embracing your mistakes. You are definitely going to make mistakes along the way. Embrace those mistakes and learn from it and move on. And that is what's difference. That's the difference between this athletic guys, because they're able to move past their mistakes. They are always improving. A trader will just have a bad week and they'll be dwelling on the bad week for like two months or something. They are still thinking of that trade that didn't go well. Guys, move on fast. And all those things, they can easily make you quit. So these are the 7 do's and 7 don'ts. Okay, so let me just go over the 7 don'ts real quick. I'll give you guys the advice, and I mean any questions to follow up and move on to the next. So what I said, the 7 don'ts that I spoke about is: don't trade without stop loss, don't risk more than you are willing to lose, don't trade with rumors. The next thing I also spoke about was don't overtrade. The fifth thing I also spoke about was don't be predictive, just act on your edges. And the last thing I spoke about was don't quit. Okay, don't quit. So guys, the last advice I would like to give you guys is there's random distributions of wins and losses in the market. Okay, the market is always going to give you random distributions of wins and losses. That is why you always have to make sure you're acting on your edges. Okay, one thing that I've really taken away from my experience with forex trading is the kind of uncertainty that forex trading gives you, because you don't know what is going to happen next, and traders always trying to avoid losing. Guys, you can never avoid losing in the market. So the more you think of avoiding taking the loss in the market, the more you continue taking the loss. Okay, and all this, or if you look at the roots of all this, it will go deep down to you not having a system that you are trading. If you have a system that you are trading, all these things comes together and it makes perfect sense. Okay, so this is the advice I have for you guys. Guys, keep on pushing, and I will use this opportunity to thank our Justice for giving me this opportunity to share my knowledge and my experience I've had with you guys. Thank you very much. So any question you have, I'm going through the YouTube page now. I'll go through if I see any question. If you have any question, guys, just ask me and I will answer real quick. Then the next speaker will also come on. Any question? I'm going through any question? Okay. I think my point that I give you guys were self-explanatory. So I mean, if you wrote them down, you can understand that. I mean, everything is clear. So since there's no question, thank you guys very much, and I will just say thank you for having me here.
Okay, thank you for informative speech. I'm sure that the guys understood what to do and what moments can be avoided in trading. So next speaker will be Kira Forex. She will tell us about proper risk management. So Kira, please turn on your microphone.
Hello.
Hello. Okay.
Hello, Kira.
Can you all hear me?
Yeah, we can.
Okay. I'm the only lady on this platform, and that's a plus for me. My name is Kira, popularly known as Kira Forex. This is my first time speaking live. I don't actually like doing this, but I just have to do it. I like writing. That is why my Telegram page is always full of theory. As well, I'm known as a theory trader. Actually, I'll be talking about capital and risk management. Now, when we say capital is a starter for every business. Now, every big business or small business you see today started with a capital. Now, the capital size or amount you start with determines your profit. It's just like the same thing happens in Forex. It's just like any other business. The bigger your capital, the bigger your returns. Let's take an example. Assuming two people want to open a cold store, and then the first person decides to invest, let's say, $10,000, and then the second person decides to invest, let's say, $1,000. At the end of the day, the person with the $10,000 is going to make a lot of profit than the person with $1,000. The same thing applies to Forex. If I invest $10,000 and you also invest $1,000, at the end of the day, I'm going to be making a lot of profits than the one that has invested $1,000. Even if we exhibit the same knowledge and expertise. Let's continue. Now, however, someone can have a capital of $1,000. Hello.
Yeah. Yes.
Yeah, Kira, we can hear you.
Okay, so sorry about that. Someone interrupted. Now, however, someone can have a good capital of $1,000, yet he will make good profit than someone with a $10,000 or $100,000 account. But this is not real unless you are a novice. Now let's move to risk management. Risk management is one of the things that separates a professional trader from a retail trader who are not making money. Now, risk management, I'm going to talk about 10 points, but out of the 10, I'll be explaining 5. Let's take the first one. Before that, let me explain risk management into details. Risk management simply deals with management strategies to make capital stay intact, yet there will be continuous profit and minimal loss. The first risk management I would like to talk about is hedging. When we say hedging, it means that when you place, let's say, a buy trade on one currency pair, make sure you place another sell trade on a different currency pair. So when it happens in the event that the first currency pair trade you placed did not go into favor, the second currency pair will cover up that losses in or on that trade. Let's take the next point. I'm going to make my notes very short. I don't really like talking to you. So. Now, trade only on more profitable periods or days. This is like, let's take it this way. If you are a day trader and you know you make a lot of profits in the afternoon rather than night, or you are a swing trader, you know that on this particular days, I make profits than this particular days. Stick to it. And then, if you know you make profit on particular days than other particular days, make sure you stick to it. And this is going to help you to manage your risk as well. Now, the third point is set an optimal stop loss level. If you don't set a stop loss, especially as a beginner, then you need to start doing that. Now, when you want to set a stop loss, don't let the stop loss be too wide or too tight. When the stop loss becomes too tight, and then trades didn't go your favor, you keep losing money. And then when the stop loss also becomes too wide, and then the trade didn't go your favor, you still lose money. So I'll advise that you always give your stop loss a breathing space, but then don't let it be too tight and then too wide. Our fourth point to be trade more predictable pairs. The higher the liquidity of the currency pair, the higher the predictability. Now, the higher liquidity pairs are the major pairs. And then the major pairs are the pairs that includes the USD, like the Aussie dollar, the New Zealand, the dollar loni, then the dollar Swiss. So, especially to the beginners, if you want to measure, or if you want to be a pro in this game, make sure you at least get acquainted with the major pairs before you move to the minor and the exotic pairs. Now let's take the last point. And the last point, I'll be talking about only trade in assets that you understand. Now, if you want to start trading, trade assets that you understand. Make research about those assets. And then do a lot of training. Don't enter into an asset or don't start trading an asset because Kira Forex is also doing the same thing. No, it doesn't work like that. If you want to stay long, and then if you want to be profitable and professional in this game, make sure you trade assets you understand, because you can't enter into a business whereby you don't know the ups and downs of the business. So I advise that you trade assets that you understand. Now, these points that I'm going to mention is part of the risk management, but because of time factor, I'll just mention them. So you can still jot them down as well. So the sixth one is trading plan. The seventh is manage your emotions. The eighth, start with demo account. 9, understand the forex market. 10, set a risk reward ratio. 11, use proper leverage. So risk management followed these steps. The most important thing in Forex is placing a trade. The most important thing is in Forex is placing a trade anybody can. The most important thing in Forex is placing a trade. Okay, so anybody can place a winning trade in Forex, but the most important thing is making profit consistently, day in, day out, with proper risk management. I think I'll end my presentation here. So if you have any question, you can ask me. Someone is asking me to talk about the hedging again. What I am trying to say is that assuming you take a buy trade on pound JPY, try as much as you can to take a trade on another pair, maybe a sell on another pair, so that in case the pound JPY, the buy trade you place on the pound JPY didn't go your favor, the sell trade will cover up the losses or the loss on the first trade you've taken. I think I've explained the hedging. And someone is asking me to go through the list again. So the first one is hedging. The second one is trade only on more profitable periods, days or weeks. The third one is set an optimal stop loss level. The fourth one is trade more predictable pairs with high liquidity. The fifth one is only trade in assets that you understand. 6, trading plan. 7, manage your emotions. 8, start with demo accounts. 9, understand the Forex market. 10, set a risk reward ratio. 11, use proper leverage. We still have a lot of them, but I think I'll end it here.
Okay, Kira, thank you so much. It was so incredible speech. Please follow Kira on Instagram. Elvis will share your link. Okay. Okay. Also join us today, Yao Swinger, to take us into the world of trader. So now he will explain to you a psychological world of a trader. So please, Yao.
Thank you very much. I hope you guys can hear me. Unfortunately, I'm struggling with code, so you guys should bear with me. But I'm going to try as much as possible to make it very concise. I mean, a lot of times we all go through videos, we all listen to psychological audios, we see tests, we watch movies trying to explain how you should control your emotions and everything. I mean, I keep telling people that it's easier said than done, right? It's easier said than done. So a lot of times, yes, we tell you that control your emotions, use proper risk management, be patient, and all that, right? Now, the moment you begin training, that is when you know whether indeed whatever thing that you read or whatever psychological thing that you've had in your mind can actually play out or not. So personally, I don't create content. I don't have a YouTube channel. So the only content I'm able to create for people is my Psychology Fridays, which I do every Friday, 10 a.m. But then we are actually planning on changing the time so that we can actually have people who are working around those times to also get a chance to join, right? So like we said, we'll be doing a few changes. So as I was introduced, my name is Yao Swinger, creator and founder of Directional Bias. I may not talk more about that, but I would just want us to talk about the trading psychology. So I want it to be a bit of what questions and answers, right? So once I'm done with this, then we can just tackle the questions and answers, and then we are done. So I am known to be the man who is constantly preaching about what's the name? Consistency, right? And I keep telling people that it is when you get consistent at something that you're able to say. So let's say if you are doing something and you've only done it once, then you can never know your win rate, okay? So yes, we mentors, we tell you that we have winning strategies and all that, and then you come and then we want to train you. Now, after giving you the training, you go and then, so this is what we usually say. So a lot of times we tell you to go and practice on a demo account, and then after you are done with the demo, you can switch to the live account and then do what you've been taught. So we have these mentees.
What's the presentation?
Please, can you hear me?
Hey, awesome.
All right, so
Is what me present.
all right, so sorry, that was just by the way. Anyway, so as I was trying to explain, you go and then you do your training on a demo, you come to live. So on the demo, you have people, you know, flipping accounts, and then they are doing marvelously well, and then they are so happy. And then that is when they tend to think that, okay, so I have the skill now. They are going in to take money from people. It's either their life savings, it's either they are going for bank loans and all that. And then when they start the real thing, that is when they know that indeed they didn't have any knowledge at all. And so when you come to my academy, my students will tell you that even before you get in touch with me, you have to be done with your consistency test. And then we don't do demo. I personally don't advise for demo practicing. So the reason is, if you are doing demo, you are not doing anything. Honestly, if you are doing demo, you've not started your training journey. Probably you are just testing how the market actually works. You want to know that, okay, if I input 0.1, this is what happens. That one, you are just trying to understand how the market works. But if you say you are practicing your strategy on a demo, that I personally don't advise. Now, the reason is, if you do your demo practicing and you come to live, that is when you would know that you started the actual thing. Now, when you take training from anyone, I constantly tell you guys that every strategy works, okay? I mean, strategies were created by people. I've also created my own strategy. Now, I'm saying that every strategy works. The moment you have a strategy, let's say your mentor told you that it's an 80% win rate. Now, there is a 20% error. And so if you want to go and practice, and then you don't want to practice on a live to actually understand, I mean, it doesn't hurt to have $100 account as a practice account. I mean, $50, you can also use $50, use a 0.01. I mean, for your own self, it's an investment you are doing for your own self. And then whatever strategy that you are practicing or you are learning, you tend to do it on it. Maybe have a 20 trading days for it. That is 1 month, right? So 1 month trying a strategy. So after 1 month, you can actually ask yourself, okay, this is what my mentor said. He said that the strategy is 80%, but after trading for 20 days, I mean 1 month, I noticed that no, the strategy is 70%. Do I think it's a strategy I want to go with? Excellent. Now you would want to actually deposit whatever amount that you want to do. Now remember that it's just a matter of proportion. Now it has nothing to do with okay, so first one, so if it was $50 and now you're bringing $500, you may just want to do proportions and then do the thing that you did when you were doing on the $50. Now, a lot of times, lot size, changing of lot size also has its own psychology. However, if you have a good mentor who is going to lead you in that direction to understand that, okay, you are only changing lot sizes. You are not changing the number of pips you were taking. You are not changing, you're only changing in value. You are not changing the number of pips. And so you are going to have your attention that when I had the 0.01 on the $50 account, so now I'm moving to 500. So let's say I'm using a 0.1 lot size now. So it's not me changing the fact, okay, so I was making $10 in a day when I was using the 0.01, or let's say $10 in a week when I was using the 0.01. Now, if I'm moving to what's the name, $500, I shouldn't be thinking that oh, so when I see $10, then I'll be fast to take, because that is the eye you have been used to. So when you see $10, you think, hey, that's it, then you take it. Now you forget that you have changed the lot size. Do you understand? You forget that you have changed the lot size. So one, let me make these things clear. Now, I'm saying that focus on what? Consistency. Now, before you come into this, I know a lot of people wouldn't want me to say this, and a lot of people will share different ideologies. We all own our own opinions. This is my opinion, and then I want to just share it. At the end of the day, you may decide to take it or not, right? So in my opinion, number one, I'm thinking we should see Forex just as the casino or the bettings do. Now, before I came into touch with Forex, I was doing sports betting. You understand? Before I came into touch with Forex, I was doing sports betting. And I have come to understand some things. It's either it is taking my money or I'm taking their money. That is what I have come to understand. And so I have come to understand that if I'm doing this and I'm making money, then I shouldn't think I'm doing the wrong thing. Now, at the end of the day, you are making money. If you don't want to think in that direction, that's fine. Do you understand? Now, because I accepted that it is gambling for me, it has helped me a lot to understand that I shouldn't go and take loans from people. Because once I have accepted that it's gambling, it means that I know that whatever money I'm going to put there, there's a higher probability of losing the money. You understand? And so that thing alone is showing me, and then it's making me use what money I can afford to lose. Even when I have investors coming on board, I let them assume 30% risks on their capital. Do you understand? 30% risks on their capital to tell you that even if I'm going to lose, I have access to 30% of your funds. I don't have to lose past that. Do you understand? So, number one, for me, accepting that Forex is gambling. One, it's either it's going to take your money or you take their money. Two, number three, look out for consistency. Consistency. Just practice what you've been taught on a live account for at least 1 month, and then be sure that whatever, I mean, the mentor could be lying. So yes, everyone knows Yao Swinger created directional bias, and so he's preaching about directional bias, and then you also had directional bias. We gave you the knowledge, and then the next day you are with some loan, and then you want to just go and start all your, you get it? You just want to think that, oh, the directional bias, then you want to, what about the error? What about the error in the strategy that he said was 90%? There is an error, 10%. Do you understand? And so practicing for 1 month is when you can actually tell that indeed this is true. Then you can ask yourself, why is it that these days when I lost, there were actually confirmations, or my setups were actually aligned, but I still lost. That is when you're able to learn. Do you understand? That is when you're actually able to learn. So for me, consistency is one thing that you don't do. You can't be called my mentee. My mentees are aware. They know that if you don't do your consistency test, you can't be called my mentee. You may have paid for a strategy which I would give to you, but to be called my mentee, you need to do what the consistency test first. And then after the consistency test is when I move you to your what profitability level. Now I keep telling you guys, it is not as they preach out there. A lot of times, it is not as they preach out there. We have people saying that, yes, I have blown a lot of accounts. That is, I think it's a lingua franca for everyone. I mean, everyone is saying they blew account. Yes, we blew account. Yes, I blew account because I didn't have a mentor. I didn't have any opportunity to learn from anybody. I didn't even know what I was doing. Probably the YouTube learning. Oh, we chanced on, what's the name? We chanced on Forex, and we want to also do it. So that is when we were blowing accounts. Now, if you found a mentor, your mentor is there to help you skip that part, especially. That is what I think, to help you skip that part. I mean, the struggling part. And so if you are picking your mentor and then your mentor isn't going to help you, you should know that this person doesn't want to help me. And then you just look for somebody who wants to help you. Forget about all these flashy things you see out there. If you can help somebody, I mean, you should have your students talk about you. That is so one thing that I like most about Elvis, and the reason why probably we tend to connect a lot is in the fact that anytime I have a chat with Elvis, his motives are on changing the game. We want people to actually have the right concept. Now people should understand that yes, you can lose, as we all say. However, they are also making us think that we should work in a certain way. Remember, you have to be smart to beat the market makers. At the end of the day, whatever thing that is being taught out there, remember, they also know. And so if you want to beat them, you need to find a smart way to actually beat them, and you just be good. I do this every Fridays, 10 a.m. Let me give chance for you guys to ask questions so I can actually address those ones. Fridays, when you get a chance, just follow, listen to me, let's talk more, let's interact, let's share ideas, and then we can actually take it further. So let me read your questions from the comment section, and then I would actually address them when I can. I think in 10 minutes. Thank you. All right, so I'll be waiting for your questions, and then it should be related to psychology so I can actually address it. Your struggles, whatever thing, just let me know, and then I'll address it. Yes, again, so you can follow me on Instagram at Yawswinger, YAWSWINGER. All right, so I don't think I'm going to have questions coming in. So Elvis, for the sake of time, I think I should end here. Okay, so
okay, thank you so much. It was
sure. All right, so somebody asked if how do you deal with losing streak? A lot of times I want to answer this question this way. I don't think we should have losing streaks when we have a winning strategy. Now remember, your strategy is saying that it is 80% accurate. Let's just say this is the strategy that you are using. It is 80% accurate. And so it means that out of 10 trades, you are even aware that you have to lose 2. Do you understand? You're even aware that you have to lose 2. And so if I begin today and I lose 1, I'm okay. If I go on the next one, okay, and I lose again, I should be okay. Now the next loser would keep me asking questions, because remember, the person said it is 80% accurate. So why did I lose 3 out of the 10? That is depending on whatever number you are using for your statistics or something. Do you understand? So for losing streaks, we shouldn't have that mentality that we are having a losing streak. No, have a winning strategy, stick to that strategy, do that same thing over and over and over and over and over and over and over until it proves wrong. You understand? You just have to do it over and over and over and over. Don't even try saying it is wrong. Now, if out of every 10 trades you are still winning the 8, then why do you change? So for me, I wouldn't know how to address losing streak when you have a winning strategy. Thank you.
All right, get me a marker. Okay, is this good? The other one. All right, great. Okay, what's good, everyone? How's everyone doing? Okay, I'll be watching your comments with my iPad over here, right? Or I'll be using the screen. But first of all, thank you, Yao Swinger. Guys, follow these guys. Yao Swinger, Dr. Harmonics, follow Ken Swinger FX, follow Kira _ Forex, follow _ it's CODX, follow Kema Trade, follow all these guys, right? You know, anytime I reach out to them that I'm doing something, kindly come help me. You know, they all, you know, come over to help me. So I promise you guys that today I'm not, you know, coming to tell you about Forex is this, you know, I've done this with Forex. If you do this, you're going to make money. If you are doing this, you're going to make. I said I would teach, I would explain, I would do a bit breakdown of all the markets, you know, I'll classify all the markets into what you guys have been hearing: futures, exotics, you know, bonds, all these things. I'm going to try and explain them, right? So I would be doing this with you, right? I'll be doing this with, that's why I brought my my iPad to watch your live comments. So let's start with this. Trading. I don't want to waste much time, right? I would break everything down so you guys can they watch, can they, yo, could zoom to the board so they can. All right, zoom to the board because I'm going to write. I don't know what this. And I told you guys that we've opened a new trading lab in Europe. This is it. All right, great. All right, so I'll be doing this with you guys, right? I'll be doing this with you guys. So it's just like a conversation that we are having, just that we are having this online, right? So first of all, right, notice this. First of all, right, you can follow the best mentor. You can be with a successful mentor. You can even get 10, 20 mentors teaching you Forex trading or teaching you crypto trading or what have you trading, but you can still be a failure of it if you don't do the necessary work. For example, if let's say I teach you that 1 + 1, we all know that 1 + 1 is what? Is equal to 2, right? We all know that. But if I teach you that, if you also see another question, like let's say 0 + 0 + 1 plus, let's say 1, it gives you the same answer as 2. But what's the difference between this and this? The difference between this and this is because I've told you that 1 + 1 is 2. This is how I trade. You also go and see the market in a different perception, and you can't make money off the market. Why? You just don't have to, you know, you just don't have to get the knowledge. It's not a matter of getting the knowledge. Let's say you go to Kema Trade, you go to your Swinger, you go to Ken Swinger FX, and you get the knowledge, and the next thing I'm in to make money. No, you also have to have a mastery, something we call a mastery. You know, if you have the mastery, when I say mastery, it means perfection. You don't get the knowledge, let's say day 1 and day 2, you want to apply the knowledge to make money. Nope. Do you get it? Perfection is you having a mastery of something, you perfecting, you trying to, you know, repeat, you trying to practice, keeping on practicing before you get the final result. But before I talk about that, let's go straight to trading. I'll come back to talk about this, but let's go straight into trading quickly. Now we have Forex, right? We have 4 majors, so you can write it in your maybe your book or whatsoever. We have 4 majors in trading, right? In trading itself, we have 4 majors. In trading, we have 4 majors. We have Forex 1. We have cryptocurrency. So let me just write cryptocurrency. Okay, I'm going to explain each of them, right? Quickly, I'm going to explain each of them. So we have Forex, we have cryptocurrency, we have stocks. Okay, there's stocks. Are we there? I don't see their comments. All right, cool. We have Forex, there's cryptocurrencies, there's stocks, and there is synthetics. I'm going to explain all of them, right? Synthetics. Are we there? Now, before you come, we have majors and we have minors. I'm going to talk about the minors. I'm going to talk about the majors. For now, let's focus on the majors. Like I said, we have this trading. If you come into trading, we have 4 majors and we have a lot of minors. So you see a lot of traders, right? They've perfected themselves into knowing or acquiring the knowledge of these majors. That's why you see someone just doing Forex. The person is a guru in Forex. You see someone just doing cryptocurrency. The person is a guru in cryptocurrency. You see someone doing stocks. The person is a guru in stocks. You see someone doing just synthetics. The person is a guru in synthetics. These are the majors that you need in trading. The rest that you see or the rest that you hear, the rest that we all make noise about is what we call the minors. I'm going to explain something. But before I explain something, I'm going to do a giveaway. First winner gets $100. Now, let's say we are all we are all doing a business, right? We all want to create a business, right? What are the requirements of it? Now, in trading, right? Put yourself as if you are in a business world. You are trying to open a shop. You are trying to do something. Put yourself in that. Think like you are a businessman now. Are we here? Think like you're a businessman and you are trying to open a business. Now, what are the requirements or what are the things that you are going to need before you open a business, right? Let's just list them. Let's just list them. The things that we would need before we open a business, right? I want to see them in the comments. I don't know, my iPad is slow, but let's see. I just need 3 points. Someone to list 3 points gets $100 from me. Market research, okay. Okay, you have to have an idea. Let's say an idea, okay. 3 points. Capital, I like that. Capital, right? We need capital to start a business, right? Cool. And who said the capital first? Wow, there's a lot of comments now. Bill Dave, do test me for $100. Bill Dave, do test me on for $100. So yes, I'll be doing a lot of giveaways here. So I'll be asking questions too. So please pay attention. So capital, business, good. You need an idea, you need a capital, you need knowledge. Great. We are now opening a business. Let's say we all want to open a business called trading, right? What do we need? We need a land or place. You need a land in the market or what? I don't get you. Okay, you need your target audience. Okay, you need a skill. Okay, no, you don't need a skill. Okay, yes, you need a skill, but you learn a skill. So it sums up to knowledge, all right? Cool. You need a mentor. You need a business plan. Great. You need a plan. Who said the plan? MFTV. Do test me on Instagram. So $200 gone already. You need a plan. We need another point. One last point. We need a good locations to start up. Okay. You need a mindset. You need to focus. You need a strategy. Strategy is the same as plan. You need a mentor. Okay. Not all businesses have mentors. They just have people they admire or people they look up to, but not everyone, Okay, keep commenting. Knowledge of business, mentor. You need a strategy. Strategy is the same as plan. Okay, we've already talked about it. Quickly. Risk management. You need discipline. Discipline also falls under plan. Mindset and everything comes under idea and knowledge. You need tools. Tools comes under capital. You are going to use the capital to buy the tools. You need execution. I need one thing. We have knowledge, yes. Great. Who said the vision? I saw someone saying vision. Vision. Oh. I can't see the person. But let's see. You need vision. This is a business plan. We are creating a business plan right now. Let's all think like businessmen or business women, right? Let's all think like, I don't know why I'm always with headsets though. We need an idea. You want to trade Forex, you want to trade cryptocurrencies, you want to trade stocks, you want to trade synthetics. You need an idea. You need to know what this is about. There isn't any business, right, in this world that if you want to be successful in it, you don't know what you are doing. You don't know anything about the business. You are going to fail. You need an idea. One, great. You need a capital. Mention any business that has been doing well. Last time I had this interview with Metro TV and I said in cryptocurrencies, you need capital to succeed. And someone challenged me and told me that I don't know anything about cryptocurrencies because he has seen someone move $5 to $75. So the person is successful in cryptocurrency trading. Mention one person that has been able to move $5 to 1 million. Let's be realistic. You know, you need capital in this business. In every business in the world, if you have $1 million mindset, I don't see why the need of you starting Forex, cryptocurrency, stocks, synthetic with $5. I'm not saying that, you know, I know not all hands are the same. I know not everyone can afford this, but what I'm trying to say is you need capital. Never think you are coming into cryptocurrencies, you are coming to Forex and you don't have capital. You would always be suffering. That's why a lot of small accounts are always suffering. Small accounts, you grow it, you come back down. Small accounts, you grow it, you come back. But we are going to talk about that quickly, right? Let's move on to the next thing. You need knowledge. You need knowledge. Now, I always say this, that knowledge that is not applied is not knowledge. I see a lot of people, they know the theory, they know technical analysis, they know they can read fundamentals, but are you applying that fundamentals or that technicals to make money? Remember, the goal here for a business is what? Profits. I forgot to say, the goal here is profits. That's why I always tell you guys that make money, make profits, and that is it. You are here to make money. Any other thing is noise to you. Are we focusing? Any other thing is what? Is noise to you. Right? Now let's go to plan. You need to have a plan. Set goals. That counts under vision. Set goals. Okay, I'm let's say 20 years. In the next 5 years, always set your goals in like 5 years. When I started Forex around 18, 19, I set my goal like, in the next 5 years, what am I going to be doing? I'm 23, moving to 24, and I'm here. And I started around 18 years. So you can 18 plus, let's say 4. I'm somewhere 23. So like plus 5, you can do the calculation. So always set your goals like in 5 years, what can I do? Don't come here and say in 2 months, I'm in debt, in 1 month. You know, have that long-term vision. And last point that no one mentioned, passion. Man, you have to have passion. You know, you have to have, you know, Kema was saying something and I was listening to him. He said, I lost last week or last 2 weeks. I'm not shy of telling you guys this. I lost $42,000, right? And I'm not shy of saying this on camera, on this live. I lost this. And why am I still doing so? Someone will be like, oh, Elvis, why have you lost $42,000 and you're still doing this thing? It comes here with a passion. I'm passion driven. You should be passion driven if you want to start a business. Idea. You have to have the capital. You have to have the knowledge. You have to have the plan. You have to have the vision. You have to have the passion. Yes, I see other comments. You have to have due diligence. Okay. You have to have networking. Okay. You have to have aim or goal. You have to be determined. Great. So those are all part of the things or the requirements that you need. Now let's go straight to the chat without wasting much time. I hope you guys wrote them. Right. So great. Hang on. Still, the giveaway is coming. Questions are coming. So, like I said, I love to interact with people. I don't just want to talk and, you know. So Forex, right? Forex, we like when Kema was doing the presentation, he said Forex is foreign exchange. That means we are basically doing currencies, right? We are basically doing currencies. And mind you, what we are doing is Forex, cryptocurrency, stocks, synthetics is very simple. We are just doing something we call price differentiation. Price differentiation. We are just differencing the prices of the market. If, let's say, I have something at a price of, let's say, 175. Are you guys following? If, let's say, I have something with a price of, let's say, 175. Let's just say I have a phone, right? Let's just say I have a phone for the beginners, right? For the beginner, let's say I have a phone, $1,000. I'm explaining the majors, right? I'm explaining the majors. Let's say I have a phone of $1,000, right? And I want to sell the phone, right, to someone at, let's say, $1,200, right? If I sell the phone to someone at $1,200, those that are following, next person gets $100. How much profit have we made? First comment. If I have a phone, $1,000, and I sell to someone $1,200, how much profit have I made? Quickly. Marvin Talks, DME. So Marvin Talks has one, so far $300 gone. Cool. We've made what? $200. We are trying to sell something. Let's say a phone, let's say an iPhone or something. We are trying to sell it to someone, $1,200. We've made $200 profits. But let's say we've been using the phone for 4 years, for 5 years, for 6 years. And let's say we've been using the phone for what? 5 years, 6 years, 7 years, whatsoever you. And the phone is old. That means the phone has depreciated, right? And we have to sell the phone, let's say, for $800. How much profit have we lost? We've basically lost $200. Could I please? It's coming off the Bluetooth. We've lost what? $200. So it's just the same thing as, you know, all these things, all these majors that you see, right? If, let's say, I'm buying a stock price at 175 and I'm predicting the price to go up, and let's say I think this price has to go to, let's say, 200. If the price goes to 200, I make money. And if the prediction that I'm going goes against me, I lose money. This is the same for all these all these majors. Now let's go straight into them. I hope you guys do understand. You can ask questions. Well, I hope I see them. All right. So now let's start with Forex. Now, Forex, let me break them down. We have the minors of Forex. Let me break them down. Now, Forex is foreign exchange. Foreign exchange, that means we are dealing with currencies. That means we are dealing with currencies. So currencies, example of currencies that you know, let's say a currency of USA, a currency of Germany, currency of what are they? Just tell me the examples of currencies. Examples of currencies. All right, USD. Great. That is US dollar. Great. CHF. Okay, so it's franc. What else? GBP. Okay, I want you guys to be telling me. EU, Euro USD. Great. Now, these all falls under what? Currencies. Now, what's this? These currencies that you see is what we are going to trade under what? Under Forex. All these things that you see is what we are going to trade under Forex. And we have minors of Forex. The minors of Forex are one. This is what most people don't know. The main minor of Forex is one, futures. I always say I do teach, I'm about to teach futures, I'm about to teach futures, I'm about to teach futures. People don't get it. And people think it's something, you know, broad, futures. No, it's nothing, it's something very, very simple. This is Forex, major. We have major, the whole Forex is what I've broken down. Here's NZD, I see some comments, NZD, what have you. Yes. So US is USA, Switzerland, UK, Euro. We would break that down into stocks too. Okay. So we have futures, right? We have futures. We have crosses, minors of Forex. We have futures. We have crosses, and we have exotics. Now, who can explain to me or in a comment section the difference between futures, crosses, and exotics? These are minors under Forex. This is Forex. This is what everyone thinks Forex is. But under Forex, there are a lot of things that goes on here that people also don't know. So comment section quickly. Futures, crosses, exotics, differences, $100. Yes, I have to give out money so people can participate or because I'm like all right, so differences quickly. Yes, JPY, they all form, yes, they are all under currencies under, yeah. But I'm talking about mine. These are majors. We have, like I said, majors under Forex. It can be broken down into futures, into crosses, into exotics. Right? So futures, crosses, exotics. What's the difference? Exotics are developing pairs. Okay. Exotics are pairs of currencies from the less developed countries. Okay, you are getting there. Exotics are less traded. That's not an explanation. Exotics have low volume. That's not. Exotic pairs are less traded. Nope. Yes, they are less traded. Okay, so I have a winner here. Hawks, DME for $100. Cross is non-USD. Yes, crosses are non-USD. They are pairs without USD. And exotics are developing pairs. I'm going to explain them, don't worry. Are developing pairs. So, and futures are like, you need futures to depict the movement of all these currencies. So for example, if I say dollar index, let's say dollar index, I always tell you guys dollar index. Let's say pound index. Let's say euro index. We call them index. I'm going to explain them. Futures depicts, you can write it, futures depicts the movement of all the currencies. So someone may choose to master in just USD pairs. That means the person should first of all come to perfect his futures. I always say this, that if you want to be a great Forex trader, you don't have to play with your futures. You don't have to play with your future. A lot of people come into trading and they're already trading GBP, USD, Euro, USD. Like I was saying, you have to have a plan. The first plan is to perfect yourself with futures. If you know you are doing USD, that means you have no business with crosses, you have no business with exotics. Either than USD pairs, and you want to go into, let's say, GBP, Euro, NZD, and all these pairs, like the Singapore pairs, and a lot of people are from Singapore, some are from even, I'm in Russia now, some are in Russia. How do you know about these pairs? These pairs are not popular. And there are other countries also trading these pairs too. So if you have no business, you feel like I don't have any business with USD or USD, that means you have to also take note of crosses and exotics, leaving these ones also aside. Unless you have USD as your favorite, and everyone is doing USD, so it becomes common. So for example, let's say, I always say this, let's say USD XXX. There's this formula that I always use. If USD XXX is going up, that means XXS USD is coming down. This is an example of future. This is an example of futures. Same thing if let's say Euro XXX is going up, that means XXX Euro is also coming down. Futures formula. I don't know if you guys do get it. If you want to be a great Forex trader, you have to pay attention to what? Your futures first, because your futures is going to depict the movement of all these currencies that you are seeing. It's going to depict the movement of all these currencies that you are seeing. Unless you want to trade crosses, you don't want to, you have no business with USD pairs. You don't, that's when you come into what? Crosses. So the minors of Forex is what? Futures, crosses, exotics. So for example, let's say we have USD. Let me not go into that, but just know this formula. This is futures. Let's not go more into it because of the time that we have. Right now, let me come into. I'll come back to Forex to make an example, but let's go straight into cryptocurrencies. Can I have another marker? S2. I don't know. Okay, let's try this. All right, let's talk about cryptocurrency. I'll come back to finish the Forex up, but let's talk about cryptocurrencies. All right, let's talk about cryptocurrencies. So yes, someone would say, so futures is more like a leading indicator. Yes, great. It depicts the movement of all these pairs. So if you don't know what's going on in your DXY, your dollar index, your euro index, your whatsoever index, you don't need to trade these in the first place. Now let's go into cryptocurrencies. Cryptocurrencies, we have Bitcoin. I always say Bitcoin and the others. We have Bitcoin and we have altcoins, right? Now, someone should give me an example of Bitcoin. Because can you give me an example of Bitcoin? Of a Bitcoin? No, you have to give me an example of a Bitcoin. All right, so give me an example of a Bitcoin. Give me an example of Bitcoin. People are already saying Ethereum, Dogecoin, Repos. See, Bitcoin is Bitcoin. There's no example of Bitcoin. So it seems like this guy, it looks like this guy is owning me. It looks like this guy is owing me. Those that have been making an example, you guys are owing me. Okay. So yes, Bitcoin, we have Bitcoin, right? And we have altcoins, right? Now I'm going to explain Bitcoin, altcoins. Just like how you guys see Forex, now in cryptocurrencies, in the world of cryptocurrencies, it's a bit different. Let me add NFT. I'll say something about NFT, non-fungible. Yeah, I'm going to talk about NFTs too. But let's talk about Bitcoin. Just like futures, right? The same idea or the same concept that I explained with futures, bring that same example to what? Bitcoin. If Bitcoin is going up, right? If Bitcoin is going up, altcoins also what? Goes up. It's a formula in cryptocurrency that people don't even appreciate or people don't even take note. If you've noticed, if Bitcoin sits at the price, I think, how much? 40K, somewhere 40K or 39K. If Bitcoin goes to 60K, you see most of the altcoins also boost up. If you see Bitcoin coming down, most of these altcoins also coming down. Now, someone will ask, what is Bitcoin? What is altcoin? So Bitcoin, let me give a bit history about Bitcoin, how you can trade it, how you can make money of it. Quickly, we have a few minutes left. So Bitcoin basically controls cryptocurrencies. When I say cryptocurrencies, it's just like any money, currencies that is seen in a digital world. That means you can, instead of me, let's say, picking a $5 or $100, this currencies that we are seeing can be what? Can be traded, can be exchanged, or can be transacted online. So when I say I have Bitcoin, I have, let's say, $200 worth of Bitcoin. That means it's either I'm having physical cash. Just put it in this way. Let's say I have physical cash. Yes, I have $200. I have physical cash, and I have $200 on my card. Yes, on your card. right? So the $200 that you have now is now on your card. It becomes what? Digital. Same thing as Bitcoin. Now, the problem with Bitcoin and your card is let's say you put in your money on Bitcoin and you put in your money on your card is very different. It's very simple. Now, if let's say you put your money on your card, there's nothing like fluctuations. The money doesn't move. If you put your money on the bank, if your money sits in the bank, nothing happens to your money. But if you put your money on Bitcoin, and let's say the current price of Bitcoin is 40K, and let's say you put $5,000 or you invest $5,000 on Bitcoin, right? And Bitcoin goes up, that means your money also goes up. If Bitcoin goes down, if you put, let's say, $5,000 on, let's say, at the price of 40K, that means Bitcoin also what? Goes down. If Bitcoin goes down, your money also what? Goes down. That's why those, we have something I call buy at low, sell at high. That is cryptocurrency trading. Don't let anybody lie to you about any other thing. This is Bitcoin, crypto trading. We are trying to buy something at a lower price and we are going to sell something at a higher price. So for example, let's say there's a chart. This whole thing is a chart, right? And we are looking to buy something here. Let's say at the price of 170. And this thing plummets up or goes up to, let's say, 190. We are making profits. But if, let's say, we invest something here and this thing goes down to, let's say, 155, that means what? We are losing money. Very simple. Let nobody else, like, that is the concept of cryptocurrencies that I've explained to you here. So instead of you putting your money on what? On a bank or on a card or having physical cash, there's not going to be any value on that money. But if you put that money on what? Cryptocurrency or on Bitcoin, that means if, let's say, you are going to put your money on Bitcoin at 40K, that means if Bitcoin goes into, let's say, 42K, 43K, you are only going to make money. But if Bitcoin also comes down to, let's say, 35K, you're also going to lose money. But I always tell people that there is no way you are ever going to lose money on Bitcoin. Like you're going to lose your money. It's not like Forex. Now, the difference between Forex and cryptocurrency, Forex, you can blow an account. If you lose money, you lose money. You are out. You have to refund your account. But for cryptocurrencies, there's nothing like if you lose, Bitcoin, there's nothing like if you lose money, you've lost money and it's a good buy. That's the difference between Forex and cryptocurrencies. I'm saying this so that you also, if you are looking into coming into trading, you know which one you're going to go for. Now with Forex, the money making is a bit fast here. When I say fast, I'm not like, yo, you come here, yo, you put $1,000, you're going, no, I'm not saying that. But it's a bit faster than, money making here is a bit faster than what? Cryptocurrencies. Am I making sense? Great. Money making is a bit faster than what? Cryptocurrencies. Cryptocurrencies are very slow. They need big capital. I would advise, someone was asking, always, what's the minimum capital to trade on cryptocurrencies? I was saying 1K. You need 1K for a start. For Forex, you can come in with $100 and still be making some $20, $10, $5 profits. But for cryptocurrencies, 1K. Why am I saying 1K? Now, let me break another thing down here. We have something we call spot trading and we have something we call futures trading. I'm going to be a bit fast because you have stocks, you have synthetics to talk about. Spot trading and we have futures. I know most people know this, but then spot means you put your money there, right? And you await a month, like the example that I made, you put your money, let's say on Bitcoin at 170 or on a cryptocurrency at 170 and you wait for cryptocurrency to go, this cryptocurrency to go up. If it goes up, you make money. If it goes down, you don't, yes, you lose money, but you don't lose your capital. The only good thing about cryptocurrencies is you only have to wait for the price to move again from 155 to what? 170. There's nothing like blowing an account here. On my call, you see something like when Bitcoin was around $1, Bitcoin went from $1 to 3K and came from 3K back to $1 before, to somewhere $500 before going to somewhere 17K, and Bitcoin moved from 17K around 2017 straight to zero. 0 point something cents. And the question was, did those that invested their money on Bitcoin, when Bitcoin was at 17K, when Bitcoin went from 17K to, let's say, $0, did people lose their money? No, people didn't lose their money. You only lose your money if you quit. That is cryptocurrencies. So if you are going to invest in cryptocurrency, you only have to wait, even if it's going to take 5 years. I was making an example with 50 Cent, those that have been following my Instagram lives, that 50 Cent invested his money on Bitcoin when Bitcoin was 16K, right? And when he invested his money when Bitcoin was 16K, in 3 months' time, Bitcoin went from 16K to somewhere 5K, and he lost money. And he only loses money if he cashes out. He only loses money if he cashes out. So the only difference between cryptocurrencies and Forex is Forex, if you lose money, you've lost money. It's faster, is lucrative, is volatile. The volatility is high there. But then if you lose money, you lose money. But for cryptocurrencies, if you're going to invest, if you're going to be an investor, you have to have big capital. One, you have to also think long term. Two, if that, like I know a lot of people who are holding cryptos here. It's down. Cryptos are down, right? I'm also bleeding, right? I'm also bleeding, and I'm in red now on my cryptocurrency portfolio. But why am I not worried? I'm not worried because I know that in some months to come, cryptocurrency would rise. So if I'm seeing, let's say, minus 100K on my portfolio, right? I know that I have hope that let me not even use hope. I know that the market will definitely bounce back. And I'll see this minus 100 turn into plus, let's say 100K or plus 50K. Then I would take profit. It's all about patience here. You need patience in cryptocurrencies. But with Forex, I lost 42K last week or last 2 weeks, and I lost it. I have to find a way to come here and make my money back. So you have to now ask yourself, which one would fit me? Right? You now have to ask yourself, which one would fits me? Now let's go straight to talking about futures. Now, futures is the danger part of cryptocurrencies. Futures is the danger. Yes, time is up. Oh, okay. So futures is the danger part of cryptocurrencies. When I say futures means you are trying to risk more than normal. Here, you now agree that if I invest money or if I put my money here, I can lose everything. For spot, you are safe and guaranteed that you're not going to lose money. Now, someone will ask, okay, where do we trade cryptocurrency? I'm going to list 4 exchanges to you. I'm not going to send links out so you can get it. One, Binance. One, you need Binance. I think Binance is the best currently. You need Bitfinex. Download Bitfinex. If you want to trade cryptocurrencies, you need Coinbase Pro, not Coinbase. We have Coinbase and we have Coinbase Pro. I'm talking about Coinbase Pro. So you need Binance, Bitfinex, Coinbase Pro. Okay, Coinbase Pro, and you also need Bittrex. So Binance, Bitfinex, Coinbase Pro, Bittrex. Are we there? Binance, Bitfinex, Coinbase Pro, Bittrex. These are what you need to trade cryptocurrency. And I saw a question always, where do I trade Forex? You need MetaTrader 5, MetaTrader 4, MetaTrader 5. MetaTrader 4, MetaTrader 5. Now let's go to talk about stocks. Maybe stocks and synthetics quickly. Marina, how many times? Wow. Can you give me 10 minutes? I'll just break it 5 minutes. All right, so my time is up. Marina is sucking me because so my time is up. So let's talk about stocks, synthetics. Maybe on the next episodes, I'll do bonds and all those things. But let's talk about stocks. Now, stocks, we have 2 types of stocks, right? You have the core stocks, right? These are the minor. When you come talk about minor, that means they fall under stocks. We have the core stocks, right? Core stocks, and we have the indexes. So give me an example of a core stock. Give me an example of an index. Let me just explain since we don't have time. Core stocks are companies that we trade. We term them as shares, right? So we have I think there are 3 minuses instead. For stocks, we have core, index, and options. Options trading. So core, index, options. So core stocks are the shares, like the Apple, the companies that you guys know. Apple, Tesla, those are the US company. Let's say Facebook, you can name them, Instagram, all those things. We trade them. Yeah, we trade them. Because I mentioned the examples for core stocks. It's beer bank. Okay, cool. So all those things falls under what? Core stocks. Great. All the products, all the companies, they fall under core stocks. Now let's talk about index. Index is just like the futures, right? I wish I had time to really break this thing down, but I don't have time. So index, we have the US 30, the NASDAQ, mention them, XPX, the Germany 40, mention them. Okay, US 100 is the same as NASDAQ. The JPN 225. I really wish I could really teach this. Now, US 30 is under US, NAS is under US, Germany is under Germany. So that means if you are going to be a fundamental trader that I am, you're going to be using the news from Germany. JPN is Japanese 225. They all fall under indexes. And options, right? Examples of options. Options too are shares, right? The difference between core and index and options is core, index, and options is very simple, right? Cores, you are dealing with companies. Indexes, you are dealing with companies that have come together. So US 30 could mean that 30 companies coming from what? The core market, right? But for options, we are dealing with contracts. For options, we are dealing with contracts. So for options, we have something we call buy, sell. But here we don't call it buy and sell. We call it call and put. It's something that I have taught on my course. It's not yet, the options course is not yet out, but it's very different with cores and indexes. Here we don't trade, we rather invest. So you can also invest in stocks, just like you're investing in cryptocurrencies, but then now you are now investing in contracts. Do you get it? You are now investing in what? In contracts. And this is, if let's say someone wants to buy something, the person says we are calling something. If someone wants to sell something, the person is saying we are putting something. It's different terminologies that is used in what? In options trading. And for options trading, the good thing about options trading is that it's not like stocks, it's not like Forex, it's not like cryptocurrencies. It's a bit different, meaning that here you have 30 days. It has an expiry date. So that means you can buy a stock, let's say at 125, and they will give you 30 days. Let's say 30 days expiry. If the stocks doesn't go up in 30 days, you lose your money. If the stocks in 30 days, if the stocks goes down and your trade is, let's say, running down, you have 30 days to close the trade. So that means that if, let's say, you elapse 29 days and there's 1 day left and your stock is down, you have the chance to close it or you lose all the money. I hope you guys do understand. So that's for options trading. Let's talk about synthetics. Last one, and we are done for the day. I really wished I could, talk, teach, what I'm saying? Like, yo, what I'm saying? All right, so synthetics, right? Synthetics is one of the markets that I love or I personally do, right? If you've been following me, you guys know I've been doing, that's why the name AML even came out, because seems like I do everything, right? Because Now, synthetics is a bit different from Forex, is a bit different from stocks. Here, you don't need anything we call fundamental analysis. Kira talked about fundamentals, right? You don't need fundamentals. Here, it's just you trading what? Technicals. And when I say technicals, that's what Ken, if you paid attention to Ken Swinger, he was explaining something about technicals. Some do trade patterns. Kema was also saying some do trade trend lines, some do trade candlestick formations, and a whole lot. So here you are just going to be trading technicals. Now, examples of synthetics, right? Synthetics is manipulated. That means it's not controlled by a liquidity provider. It's controlled by a broker. The broker can, now there's one secret that people don't know. Now look at this very clearly. After this, I'll leave you guys and I'll go home, okay? After this, I'll leave you guys and I'll go home, all right? So when I say manipulated, let's say examples of synthetics is VIX. Anything I'm saying here is coming from my head. I don't have any book. I'm just ranting. And I hope I haven't skipped anything, right? We have VIX, we have step index, we have boom, crash. Yes, boom, 500,000 and those things. Which one? Yes, stepping I've sent VIX 752. Okay, cool. So these are what we have there. I don't know if I left something out. Right, cool. So now this is manipulated. When I say manipulated, that means, for example, now this is how it works. This is what something that you are never going to see, and I'm going to explain to you, right? Now, if this is how Derive, the broker is called Derive, so you can search about it, Derive, MT5 is also traded on MetaTrader 5. So if you want to get into this, now this is very nice that you can trade as low as $10. For stocks, you should come with, let's say, $500 minimum, right, to trade stocks on MT4 or MetaTrader 4 or MetaTrader 5. But for synthetics, it's as low as $10, but you need some pairs, right? If for those with small capitals and you want to trade synthetics, right? If you want to trade synthetics, right, always trade these pairs. Is it VIX? I've forgotten the pair. VIX 10 and VIX 10 1x. Aside these pairs, right? Aside these two pairs, that fits into those that have $10, $50, $20. Never trade any other pair. The rest of the pairs requires you to have more than $100 or more than even $200. So unless your capital is $10 and you want to trade synthetics, come and trade just VIX 10 and VIX 10 1x. That should be your friend. Okay, that should be your only friend. Now let's talk about this. This is how Derive works. And I'm done. Where's Marina? She should come. So let's say we have 100% traders, right? We have, let's say, $100,000. Yes, we have $100,000. And we have buyers. Definitely, we are going to have buyers. And we have sellers, right? Picture it this way. This is how brokers sometimes manipulate against people. There's $100,000 pool of funds. People are trading, and it sums to what? $100. Yes, there's jump 2 here, jump 75, jump 100, and those things, right? So buyers. So let's say buyers, the sum of monies that the buyers are placing is $70,000 out of the $100,000. How much is left? We have $30,000, right? So that means buyers are what? More what than what? The sellers. So if you were the broker, right? If you were Derive, if you were me, right? And there are buyers, a swim of pool of less than $100,000, and the buyers are by people placing buys sums up to $70,000, and people that are placing sells sums up to $30,000. Whom will you manipulate the market against? Next giveaway. That's the manipulation that I'm explaining on synthetics. If you were me, or if you were the broker Derive, whom will you manipulate the market against? There's $100,000 total traders. When you calculate all their monies together, it's $100,000, right? And the buyers has 70,000. The people with $70,000 are buying, and people with $30,000 are what? Selling. if you're a broker, whose money would you be interested in? Kelvin Asiedu, please do DM me. Sorry, Kelvin Asiedu, please do DM me. They'll definitely be concentrating on what? The buys. So sometimes your trend line, you can be having this uptrend looking for buying opportunities, downtrend looking for selling opportunities. Definitely, this could be looking like sells at this point. And you'll be looking to sell the market or to short the market at this point. But price would somehow come here before it comes down. Why? That is what we call what? Manipulation. It's not because your analysis is bad. It's not because you are not a good trader, but it's the market manipulate. They just want to come and take this $70,000, right? After taking this $70,000, before they focus on what? These people. So Derive in a way is working. I'm not spoiling their brands. Don't go and report me to Derive, guys. Don't go and report me to. But what I'm trying to see, there's a lot of manipulations here. So the way, like I like what Swinger was saying, the only way to succeed in this, not just in synthetics, in this whole trading thing, is to be smart than the brokers, is to be smart than the market makers, is to be smart than yes, it's just be smart. So should I say more? I think it's okay. I wish I could say more. I wish I could talk a lot, but then my time is up. And you guys can follow me on Elvis, on Instagram, Elvis Justice Official _. Follow Kema, follow Yao Swinger, follow Dr. Harmonix, follow Kira, follow Marina, even the host, follow everyone. And I wish I'll get time to come and explain this. I love everyone, and I think I'll leave you guys here, but I hope you guys learned something. Unfortunately, we couldn't get more time, but I hope you learned something, and God bless us all for joining. I'll give it over to Marina to conclude and everything. See you.
So guys, our online trading workshop has come up to the end. So we thank everyone who was with us until the very end. And I'm sure you have learned a lot of useful information from our top speakers. Please subscribe to the guys' Instagram, follow and follow the news. So you are a wonderful audience, and we wish you a good luck in the world of trading. So goodbye.
Camera guys, I hope guys.
Thank you, our top speakers, Yao, Kema, Kira, COD, Louis. Louis, you are with us. Yao, of course, Yao. We are so pleased that you come. You came. So, goodbye, everyone.
Now, what's your Instagram handle?
Instagram. Yes. Instagram. This is Instagram that follow Instagram. That's
Yep.
Unless you type it.
You can't see it? Okay, let me write this again.
That's better. Yeah, .ie.
Let me All right, so guys, I want to thank everyone for coming to. This was my production team. That's my big boss here, my other big boss here, and my big sister here. I zoned you, okay, and that's Kudza over there. So thank you all for joining through, and I hope it was a learning experience. To next time, we will do it really better and really plan out. God bless everyone. Thank you. Dr. Harmonics, I see you. Thank you, Kema. Kema stayed here, and Yao to stay here. So kindly follow them. Kindly follow Yao Swinger. Kindly follow Kema. Kindly follow Harmonics. Kindly follow me too at Elvis Justice Official _ God bless everyone and peace out. Yao, do you have anything to say? Yao, Kema, Harmonics, do you have anything to say?
We are much grateful for this opportunity. I mean, like you always said, I mean, to have this many people watching. Come on, Elvis, it's great. Can't wait to do
COD
it again.
is in. So COD, I think you would have something to say. Or
yeah, I just want to say thank you. Thank you so much for this opportunity.
I just want to say thank you.
To have these people, have this knowledge from us. Thank you, Elvis. That's a great
Thank you guys for joining, and see you soon. Right, we have an Europe tour coming too. Kema is coming. Yao Swinger is coming to China. So, all right, so see you guys. Peace out.
Woo!